Very good. Very good. So, hello and welcome to the MentFX private mentorship. This is webinar. So you know what webinar this is? This is webinar 129. Following some absolutely beautiful webinars, one that was offline, the 127 one, where we dealt in depth with how we can use the remastered course now and its invalidations to actually help us in our current trading, even with a very, very refined system. And we're seeing that play a huge part in a lot of people's trading systems right now. And it's just an amazing thing to see. I can't even begin to discuss how much shit is going down in regards to the number of messages I'm getting, the number of messages I'm seeing in the trade talks, the people and the trades that they are taking and refining, and the systems and the equity curves and everything that comes with it. It is amazing. It's absolutely amazing to see it, and I'm really, really happy that this is how it's, of course, going. And I'm really happy that the things that are being taught are being utilized by you guys and are adding to your trade plans no matter what trade plans they are. So something you'll notice about what we do here, like the demand invalidation or validation points, like for instance, here we have GJ, which we'll talk about today. You know, when we had this guy created, this is telling you a little bit of something. This is, as part of the remastered course, this is telling you a certain bit of information about what is going on from a standpoint of orders. And just with that alone, without anything else on top of it, there's already an understanding that you can use technically, so technical analysis, right, to approach a market and understand when to potentially stop approaching it. And what's beautiful about it is whether you're trading the ICI, a triple M, a double MB, or anything that is taught here, this concept on its own, or even if you're coming from an SMC background, or even if you're coming from retail, this system or this setup, this set of principles on its own is enough to basically weed out potentially poor price action or poor information or poor areas that you would be trading, and instead let you trade some much clearer price action that's at least signifying that something's going on, right? So no matter what you're doing, if you were, for instance, waiting for a demand zone, the only time that you would start trading this chart right here at least might have been like here on this break, right? For that demand. And from there, you can see how money started to sustain its own move in regards to not just the move starting to play out, but also how the S&Ds began to mitigate and all the crazy fun stuff that we teach throughout this area. But we'll go over this specific one today because, again, as you guys know, I don't just use the demand or supply zone validation on its own to decide whether or not I'm going to take something, right? Of course. And actually, as part of that, a lot of you are probably aware, we just released 3 live trading videos this week. So I've been feeling a little bit sick, a little bit under the weather. I still feel a tiny bit sick, but that's fine. So I had a bit more time on my hands, and Thursday was an off day because of bank holiday. So it was a little bit of a slower week. I was just managing, and I was able to get out 3 live trading videos for you guys, just really walking you through my personal system at the moment, showing you kind of how I think, what kind of context I wait and look for, and how often I actually do, quote unquote, trade a market. I hope those of you that have seen it, so those of you that haven't seen it, definitely watch it. But the ICI extras, these 3 videos were dropped this week. So the private mentorship ICI put together, this is basically a full trade plan on its own and a walkthrough of it. Again, when I put stuff together like this, these are about an hour long or so. They're just specifically talking about the information and showing you how I process things. And on its own, as I love to say, it is acting as its own course, right? I want you guys to realize that a lot of the mentorships you might have paid for before, if you have been part of others, you would get a video like this as the entire course, okay? And that's it. And then it's like, go ask your mentor for stuff now. I want you to recognize that there is a lot of stuff here. So even if you're brand new, I'm going to agree with you right now. There's a shit ton of stuff here. But the shit ton of stuff is only there to help you. And over time, you're going to see why all of it is not as much as you think. Every single thing is the same thing with a little bit more refinement, a little bit more evolution, a little bit of another path that you may be taking as a trader for your own personal system. Because in trading, the only way you succeed, and you will all realize this and learn this, is through your own personal system, right? There are going to be trades that I take that you're never going to touch. There are going to be trades that you touch that I'm never going to even consider. Or maybe I'll understand it, but wouldn't take it, right? What I mean by that is even this week on GJ, right, as I look at it, first of all, I didn't get a trade on GJ. I made a mistake. I traded UJ instead. It's all good. It's whatever. They both made great moves. GJ was much better. But even on GJ, I see this and this as the best scenarios for myself personally. These are the only entries I see for myself on the 15-minute. in this scenario here, okay? These are the ones that I would take. Some of you would have seen this is a good trade, this one, this one, this one, potentially this one, but that one never does anything. Then you'd see this is a good trade, this one is a good trade, this one, this one, this one. These could all be seen as trades. I hope you're all seeing the fact that even if you traded, let's say, all of these, there's still a very, very high likelihood that you found success and profitability this week. Because just because you're not trading the specific entries I'm trading does not mean that you're not going to be making money. Because trading is a very, very individual process, right? Some of you maybe traded here when I didn't even touch it because I didn't see a setup worthy of my taking. Some of you maybe traded here and took a normal loss, and that's fine. Then traded here and took a beautiful win, whatever it might have been. The point being, we can have different trades, different setups, different areas where we look for trades, and different markets that we end up trading. Annotations, thank you, yes. But that doesn't take away from your potential to earn, to make a positive RR, right? I just want you to realize that. Like, Dan had a field day on GJ, I believe. Was his GJ? Yeah, it was GJ. He had like a 20R week or something, which is insane, right? I think Dan was breaking even for the month, and then just now he went up 19 RR on his account. So he just made 19%, done. Yeah, he did, and he was. There you go. Right, out of nowhere. And he did it, I believe, in this run up. So I think he got involved somewhere here, but on a 5-minute or somewhere here. I'm not exactly sure, but somewhere around there, I believe. The point being is that when I put stuff together like this, I need you all to recognize that it's by no means you must trade here, and this is the only way you're ever going to make money. More of the point of it, if you really take the learning, the teaching for what it is seeing firsthand what I've done in my personal trading to develop the rules I have now. So what I want you to do is, on one hand, if you're kind of new, then I want you to learn from the technicals, right? You're watching, you're like, why is he entering there? Yeah, that's so smart, technical, whoa, it makes sense. But as you get more and more in depth with this course, what I want these live tradings or these videos I upload for you and these breakdowns to act for you is a kind of standpoint for what is Ment doing from an analysis standpoint. Like, how does he think through a trade before he takes one, right? What are the things he does? How often does he trade? And start instilling those values in your own trading. So what that means is, instead of thinking, oh my God, how did he get this long and why that long? Instead, ask yourself, why was he not trading in any of this area? Why did he wait for this area to trade? How long did he wait until he even labeled another good potential trade on his market, right? I want you to start framing the things you're doing around what I like to call a framework for patience, right? Where everything that you're witnessing, everything that you're learning, not just from a technical aspect, is also affecting the way that you're thinking about the entire market. Like, how often is he actually getting a trade? And as per these videos that I just released, for you guys, these ones, some of them were on a 15-minute chart, some were on a 15, I think, as well, or 1 hour, and one of them was on a daily. Okay, as a daily is your lowest time frame, and it's the same thing. But you'll notice, based on the time that you're using, the time frames you're using, you're going to notice sometimes there are lulls in regards to one market, right? On a 15-minute chart, there could be 150 days before I place one trade. Okay, this is reflective in, honestly, in a lot of the EU pairs right now, right? So like EU, these pairs are very reflective of exactly that. Yeah, I trade a 15-minute, but guess what? I haven't touched this thing. This was not a trade. This was me walking you guys through an example of something I was talking. I have not touched this thing. I don't even remember from where. Since the failure of the follow-through of this like mitigation initially. Yeah, so ever since like this mitigation, I've stopped following this thing, right? So for about 37 days, 40 days, I haven't touched EU whatsoever. It's like a joke to touch it for myself, right? And that's on a 15-minute basis. And similarly, on the daily chart, when you guys saw the live trading there, which you'll hopefully check out after this if you haven't seen it yet, that's these 3 videos and the ICI extras, there were months at a time, okay? Months when no trading was taking place, right? So like, when do I zoom out here? Okay. Right? Like, there were, from here to even this, to this loss right here, this took about, I mean, it looks like a few years, right? From this loss to the next break even I took was from 1999 to 2003. Now, it's not going to feel like that when you're backtesting, one, and it's also not going to feel like that when you're looking at, let's say, 1,000 up to 8,000 markets. You might even have a trade every single day. But it's really important that when you understand a one asset based solution, when you're trading one asset, and if you're also trading, if you're trading just one pair, one time frame as a higher time frame, you need to be aware that there are going to be times where you have to be on the sidelines. Even on a 1 minute chart, there's a very, very high likelihood that even on one pair on a 1 minute chart, you could wait 2 days. That might sound crazy, or even a week. That might sound crazy. 1 minute, I have to wait 5 days. You know, like that's only 5 days. It's fine. But if you prorate that similarly to other time frames, you start realizing that, holy shit, there's truly going to be time where I have to take a step back, right? Like, again, if you want to think about this, if you're trading a 1 minute and you might wait 5 days, right? What's that multiple? 5 days, 24 hours, 60 minutes. Okay, so 7,200. So if you're trading a 15-minute chart, a 15-minute chart, there is a potential chance that you have to wait 75 days, 2.5 months. Now, let me ask you guys a question. Have you seen me with my 15-minute system wait a minimum at least of 2.5 months on any one given pair? Ever? Aid said no, but I fully disagree. So that's unfortunate to hear that, but there are countless markets where I haven't touched them for months up to years. Okay? So of course, across an individual market, like Dan said, maybe I didn't specify the question, but exactly, across one specific market, there are times I haven't touched a single trade. So so he misunderstood. So what Aid meant is that I've taken a trade on a 15-minute at least once a week, which is true. But the culprit is that it hasn't always been on the same pairs, right? Like if we look at this, actually there's a lot of similar pairs because they stay in the same context for a while. But exactly as you said, Aid, right? I might have a trade every single day, but that's because I'm looking at a number of markets and contexts. The reality is if I trade a one market, having a 2.5 or longer month hiatus of no trades is very, very normal. There's nothing wrong with that. Similarly, when you're watching me trade this little stock here on a daily chart, well, there's going to be times where I haven't touched it for months, but that doesn't mean I'm not making money for months. Yes, Bitcoin is another beautiful example. Yes, very well done. Oh, I have to close this. The TradingView app, just so you guys know, I can't use it because it's breaking for some reason. But yes, Bitcoin is a phenomenal example, right? This thing is just, it's moving, but it's weird. But as you guys know, like ever since the initial weekly breakdown that started happening here, I didn't touch it until again around somewhere here. So I didn't touch it for about 434 days. And then I went back to touching it a little bit. And I touched it around here, and then it failed. Or I touched it, I think it was around here. I always forget where it was. I think I touched it around here, then I stopped touching it, and I haven't touched it for another 148 days. Something along those lines. My point being is that markets individually, you need to pull away from this idea that you are this one market-based trader. I've always talked about this. There's countless interviews online, countless people in funded places saying, this is the one pair. You will get funded if you just pull this strategy on this. Insert X number of pair at the kill zone hour, whatever the number. Like, people will just make shit up and they'll just run with it, right? Because they've seen it work for a little bit of time. The problem with that is that you're not going to see it succeed for them long term because there's no understanding of what's making that work in the given moment. Just something to remember, okay? But yeah, I just to start this entire webinar this week, I want to just congratulate a lot of you guys because I saw a ton of you catching phenomenal trades across all time frames based on who you are, it's just amazing. GJ itself, beautiful market. I saw Dan fucking pop off on this. That was absolutely beautiful to see. I kind of popped off on this, but I missed it because I traded the UJ, and all of it was sent out. Right, this is kind of what I want to talk about this week. Very quickly before I move on with the questions or before I just interact with you guys a little bit, right? Like, I even asked you guys to take this into account because it was very likely. I'm sure you guys might remember this, but this was one of the best weeks for you to really take into into your mind what I'm looking for and what I expect without me needing to force anything. This is what I sent out on 11/21. Okay? Demand got validated on a GJ hourly. Okay? Let me just... This is what I sent, and this is when I sent it. Okay? I really want you to take this in, like, I'm going to break down this entire trade later in this webinar today with you guys. So you're going to get the full on, technical breakdown of it. But right now I want you to consider what happened from a standpoint of hindsight. Okay? Because, well, we all love hindsight, don't we? So I sent out this right here. GJ, 15-minute, my personal entry. Everything's already validated. It looks very good context-wise, which we'll go over in a second. A valid demand zone got validated. So, a demand zone got validated on an hourly chart. I drew that guy in. And then I drew specifically for you guys what I want to see on this pair before even touching it. I want to see a break of that high. So, an MB gets moved into bullishness. Now, what model would that be? Likely, given the fact that it's doing a lot of back and forth at the moment. What would one break up to the top side be? You guys should be able to answer that. Yeah, exactly. An accumulation, right? Simple. Good stuff. Now... Sorry, I'm not going to talk about the context right now, but I just want you to recognize the specific things I'll look for any given day. So I want to see a break of that high, and then I want to see it start going sideways, right? Further questions, did price need to come into the zone? Do you see me drawing price coming into a zone before going long? Taking out, guys, did price have to take out these little equal lows right here to take into this imbalance right here? Okay, good. So anyone that's here from that lens of working, forget it. It's not going to help you, okay? This is your kind of starting point of like, laugh at that, look at your background. It's fine that you've done it. You're going to learn a lot from it now. But remember, this kind of stuff is not going to cut it here. It's just not important, okay? So this is exactly what I drew. I drew the fact that I want to see a break and then a consolidation go sideways and start to get a trade out of this. This is the first thing I sent, okay? This was happening before. You can see right here, it's live price, all is live, okay? Then, guess what? Price made that break. Now am I taking longs? Am I chasing this on a lower time frame? Am I chasing this for weird new rules? The answer is no. There's no reason to chase now. I know what I'm waiting for. And I drew exactly this to you guys because this is the next step of what I want to see. I want to see price correct, and you can see the way I even drew it. Part of the way I drew it is what I'm used to seeing in regards to the slopes of the MAs. You'll see a lot regarding that specifically, this concept of the slope of the MAs and examples of it and how I think about them in the most recent 3 ICI extra videos. And very simply, I wanted to see it come down, so the MAs I know would start sloping more sideways, come into it, move higher, and set up an ICI along this or this setup here. Okay, so we're waiting. Then what? Price begins to move exactly as drawn, and I drew out further what I want to see. Price, I want to see it come down a little bit, come up, and build up another setup. Price comes down, comes up, and starts building up a setup. What did I draw? I want to see it now come up and build through the top side and take the entry over the top. There's my little circle. I want to take it through the top. The ICI is building. Are you guys noticing that I have the setup ready before it even happens? Okay? I want you guys to really understand. Like, it might not seem crazy. You're like, yeah, well, like, I really want you to sit and understand what's happening here. I am drawing out exactly what needs to happen for me to take a trade. And then that thing is happening, so I'm taking a trade. At any one of these points, price could have gone to 1,000,000% higher. It could have also fell off the face of the earth and made a goober move all the way to the downside into the leprechaun pot of gold at the bottom, but nothing would have changed in regards to me taking any trades. It's really, really important that you understand that because there's a specific thing that I'm looking for, and if it doesn't happen, I can walk away because I have no need to be behind any market whatsoever. This could then make a run for the next 15 years to the next high right here, to the next liquidity high, and take it out. And I will not care. This is kind of what happened on UCAD, okay? That's what happened on UCAD right here. I was watching for the entries. Where was it? Actually, it's not that important. No, it's not too crazy. So Dan says you're effectively just drawing your plan, and if you see that happen, then you take it, and if it doesn't happen, you move on to the next. Exactly. But it's also so important just to recognize the fact that there's a specific understanding now from just a standpoint of data collection and experience of knowing exactly what a price should do if it is to set up well. This is kind of what I wrote. Where did I write this? I wrote it somewhere here because yes. Yeah, this. If I can maintain this move right here and then it creates an ICI where I basically drew it, I am 100% in this, right? There's an understanding there, not to randomness, but there's an understanding there to how prices move, okay? When I say something like that, I hope you guys see that there's this true understanding there, right? I'm 100% in this if it does exactly this, and then it does exactly that. There's a knowledge, there's an understanding that I'm 100% going to be behind a move, given that it does a specific set of things before it's even shown me that it's doing it. That is what experience, and that's what you're working towards. And that's what I want you to recognize. When you're taking those photos, when you're screenshotting your setups, you're not doing it because you're like, fuck it, I'll have a screenshot. You're doing it because you're going to go back over them. You're going to go back over them thousands of times. You're going to comb over specific details of them and compare them. You're going to get used to exactly what price does every single time there's a good setup for you. And you're going to get used to it. And over time, you're going to be able to look at a setup and say, this setup is like A+, B+, C+. You'll be able to do that, and you'll know exactly where it's setting up and why it's setting up and what it should do based on the setup, right? There's a specific understanding. And you're going to see, even in most recent Outlook, so recent webinars, as well as the live trading, the ICI Extra videos I just uploaded, you're going to see me countless times tell you exactly what I want to see. And then if it happens, then I'm taking a trade. And I'll literally sit there and go, it should ICI now? It did. Perfect. You're going to see that happen multiple times in that video. So part of this webinar is telling you and showing you this happens, and this happens before price happens. It happens on live price. It happens on this previous weeks of price. It's the same thing on repeat, but also you're going to see it happen in this backtest live trading video that I made for you. So you can see exactly how I look at it, see it, and interpret it, and then take it after once it sets up. I understand where the setup's going to happen. A good setup that's going to happen on any good market, I know where it's going to happen. An example of this, again, is even this week. If there is going to be a GJ trade for me this upcoming week, right? And this price, let me ask myself, is it still moving in a way that I want to see? Yes, it's still moving bullish, beautifully bullish. It's at this high, which means that it can easily have still follow through. The hourly, in this case right now, actually, I'd say the hourly is a little bit overextended, okay? But yeah, I would say the hourly is overextended. So what I could tell you, just from a standpoint of exactly what I want to see, is that price should play around here a tiny bit, make some kind of demand zone. That will happen. A demand zone will occur. Then on a lower time frame, once a demand zone has occurred, the same thing's going to happen. That demand zone will usually lead to this being in a longer term range that's then going to set up here, or it's going to be a range that starts coming up here for a reaccumulation and makes a setup along these lines. And my entry will be here or here, somewhere in this prospect right here, off that exact same setup, right? I know that the week for GJ looks like this. If the demand zone gets created, the stage one starts to occur, and the setup happens the way I'm used to seeing it. I know exactly what I'm looking for. I can see the price in front of me. I can see what the price is going to do if I'm taking a trade. Otherwise, what can it also do, guys? Boop. Great. I have nothing to touch. Boop. Great. I have nothing to touch. I have a specific, basically, look at, like these glasses here, you guys might not know this, they're not prescription glasses. The glasses I have on right now, they're actually showing me the future of the chart, okay? And they show me what the candlesticks need to do for me to actually take the chart. Now, what's crazy is these glasses are available to all of you for sale at $100 a month if you just go through the course, right? Can you believe that shit? Point being is you can start seeing what the future of price is telling you, the bargain. You can see what the future of price is telling you if you take the time to experience and get confident over what you do. And then that follows up with our beautiful, the age-old question, which is, if you've reached a level that's even a tenth of that, okay, do you think that FOMO, a lack of being able to control your emotions, and any other fun little thing are going to be things that affect you? right? And you slowly start to realize that instead of focusing all our resources, our energy, all our whatever the fuck we're doing on worthless shit, right? Instead, we can focus on the stuff that matters. The stuff that's hard, because guess what? Being new to this, guys, being new to this is a fucking shit show. Being new to trading and having to work through all the stuff here and then having to get on charts and just basically force things until you start learning things, it's a hard thing to do. But guess what? It's a skill set. And a skill set takes time. And a skill set takes experience. And a skill set requires evolution of a certain kind. And you get better and better and better. And that's what you're learning to do here, right? But the point being is, right, this is what's drawn out. And guess what? It keeps playing out. That's what's further drawn out. And boom. I took the trade on UJ because I'm an idiot, okay? I actually just had the wrong pair open, but they both had the same setup. So I set up the buy stop and it triggered. And I was like, oh, nice, I'm in. And then I saw it was UJ and I was like, okay. I guess the setup is still fine because, you know, I can still protect it. It's very sad because, again, that small fuck up, even though I'm doing amazing, I'm still in this UJ, right? You guys know I have my stop loss managed. This trade is beautiful. But you know what's more beautiful? This trade. Here, wait, let me go to a 15-minute. So this trade is much more beautiful, okay? Let's get that right now. Like, this is what I gave up because I fucked up. But this is still what I gained because my fuck up is never going to affect me in a negative way because I know what I'm looking for. This is up 10 RR. This thing's up like 20. Even if I increase the stop loss maybe. Yeah, 16 RR. Like, it's insane what I've done. And that's fine, right? UJ is still here. GJ did this. Why? Because GJ has the strength. GJ is the better contextual pair, right? And UJ stuck here and it can't make a move. Hopefully into this week, I get my move. Hopefully GJ just explodes even higher for whatever reason. And I'll be very happy. But this is what happens, right? When you make small fuck-ups, that can happen. But my fuck-ups are never going to be fuck-ups that actually screw me over. Let's put it that way. Because they're not based on stupid emotional mistakes that are going to come back to bite me like long-term, right? They're just mistakes that are made as a trader because you're looking at a lot of things every single day, 24/7, and you sometimes get off track. That's fine. Yeah, it's just human error, exactly. Would you look to enter that mini correction instead? So like right now, I would not look to enter anything, right? This is ugly price action. If you were to take another UJ trade, just so you know, the other trade available on UJ for my personal eyes, okay, would be, I even don't like this one. If this one went sideways a little bit, if this one made an ICI right here, I would say it's a good trade. Okay, so I would not touch this. And then the only thing that I would maybe, no, I wouldn't even allow it. Yeah, there's nothing here. This is ugly price action. At this point, I want to let this play around and hopefully not chop me out and instead chop around and make that move. Right, this is one of those scenarios where it's up to the trading gods, the market maker gods, to play around in a way that doesn't take my stop and will continue the move. That's really all it comes down to. I don't see a trade here. Even if it did this and then set up beautifully here, I would not take this. Why? Because this is telling me a certain amount of things about what's happening at these price levels, what kind of buying and selling is happening here. This is not a fresh range, a brand new area we're working with. The MAs haven't been interacting beautifully with price. Instead, they've been kind of now intersecting too much. This is one of those scenarios where I simply pass up on this for the prospect that this can happen multiple times and set up over and over and over again, right? It's super, super simple. Do we have to use MAs? Not at all. Not at all. They're used by me because over time I've gotten very used to how price moves in regards to the averages, right? And it's also helps me with profit taking because I actually spoke about it in the live trading videos that I just released. So in the ones right here, in these ICI extras, these three, you're going to see why I use them for myself personally, but you don't need to use them at all. Of course not. Different people will find different positives out of using different things. Remember, I didn't use MAs for the first 12 years of my trading career, right? Which webinars do you cover, reaccumulation or redistribution models? 100 and onwards, but you should always take notes as you go so you can always go back. If you start noticing that I'm going over something specific at one point, Write that down so you know where it is. Anton, will you create a website like FX Replay? You created the M Manager and the Men Funding Firm and some cool indicators for us, so maybe in the future think about it. Maybe. But honestly, you can do so much more with just your own like little Excel sheet. So if anything, I may put together a better journaling software, or like a simpler journaling thing where you can put in photos and stuff, because I think that's lacking. But I don't need to create something like that because I really don't see the benefit in it, right? I know a lot of people see huge benefit in it for some of you, but I don't, right? If I had to redo this whole thing again, if I had to redo training all over again, I had nothing, boom, wiped information. But I know that I can like I don't know, you can't really wipe it, but like wiped information of a specific system, but I know how to be profitable. The first thing I would do is get on TradingView, because I already have TradingView. I would move the chart left, and I would start doing what I do every time. I would put on a few things, a few indicators like MAs or the MB structure, or yeah, that's basically it. MB structure, triple M, something like that. And I would start looking at price and saying, what are the conditions for some of these moves? And I'll start taking photos. And then after I have the conditions and the photos, I'll start to test those conditions and look for more of those conditions in different markets. I start looking at those and find photos of them. Then I'd start comparing and contrasting the photos and seeing what's similar, what's not. Then I'd maybe throw on another indicator, take off one, understand what is it doing in regards to an indicator. Just let me see what's happening there. Is there something there? No, yes, don't care. I've learned something about that. Phenomenal. And I would do that on repeat, right, until I have some form of a trade plan. A 1 through 6 bullet point of a trade plan. Even very simple. Break even at 1 to 1. Target 1 to 3 or more, take off 90% at 1 to 3, let the rest go. Okay, now I want to go into a backtest environment without backtesting and find this exact trade plan on a market over and over and over again. Find it on a market, photo. Do it about 1,000 times. Great, now we have that. Now, look through them, get used to them, understand the trade plan there works, or tweak the trade plan if it doesn't. Replay mode. At this point, I still haven't needed a single thing from the, let's say, the backtesting softwares of the world, because it's not needed. That kind of information is not going to help me. The information that they show me is not helpful, and it's not calculated well, at least in my opinion. So the only thing that is good about it is the potential showing. If you're teaching, it's good for showing, because you at least it works in a good way there. But other than that, if you're trying to learn this for yourself, I have different ways in which I would want to do that, right? So I don't see a specific benefit to something like that when you can gain a lot more benefit on a much higher value basis from doing what I just spoke about, right? Because that's what I did, and that's what I've seen other people do, and that's what other people that have succeeded do, right? And now I can even ask Dan, because I know Dan is doing extremely well for himself too. Let me ask you a crazy question. Did you at any point feel like a backtesting software was the thing that separated you from the rest? He already knows the answer, right? He gives the instant no, because the reality is it's not the software that's making you profitable. It might be a feel good thing because you get to see all that cool stuff going on, but the reality is the profitability comes from just repetition of seeing the same thing. And I can see the same thing with my subscription here, right? So here I am, just fucking advertising the living shit out of TradingView. But, right, I don't need to do that, right? So right now, like, I can go back and I can study the moves of this, and I can get used to it, right? And I know that going back now, if I was to do the 1,000 thing analysis, I could look at this and be like, there's no good trades here because it's not clear price action, right? Like, this is ugly, and lo and behold, if I tested 1,000 variants of this price action, I'd probably not trade it. Dan said, I needed to learn context first. Software does nothing with that. Then only at a stage, I worked on creating a spreadsheet to create an entry criteria. Never used a piece of all the software stuff as never needed it. Exactly, right? Already paying for TradingView, may as well use that. Exactly, right? You start realizing that people want to treat trading more as a, what I like to call it, people like to think of trading, if they're learning, as a game of validation towards themselves. It's very weird. This is why they will lie to themselves in backtesting. This is why they'll just do random shit. That's why they'll all in on like funded challenges and get one and then be like, look at how good I can do. People, and then you can even get a really good look at this by seeing what the Instagram and the Twitters of the world look like on the trading side, where everyone is competing against everyone else. Everyone is like in a drama feud. There's not a single like mentor that I actually know that's like not in a drama feud of trying to fucking compete against someone, and everyone's like, ah, you fucking bullshit. Like, it's so weird. And it's like, these people are traders and they're teaching trading. How are they instilling this kind of behavior in the people that are looking up to them? It's insane to me, right? There's this need to validate yourself. So what a lot of people do is they'll look for software that validates what they feel. So instead of learning from the charts, they'll go and like, oh, look at how good I can, and like, damn, look at this. And it's like, I don't know, man. It might be cool. I get it. But are we trying to be profitable, or are we trying to have a big dick? Because if you want a big dick, just go have some of those pills, I'm just kidding. On it. Yeah, but it just doesn't make any sense. Okay. I was in the Mentafex trade ideas, right? So step by step, that's exactly what I looked for. And step by step, it's exactly what happened until I simply played out the trade into its management, continued managing, and now, well, luckily enough, we're at this beautiful, beautiful little point in our trading where I'm just waiting, right? Yes, I missed the big move like this one. I even sent it out. I said it's so sad. But this is the markets, guys. I miss 1,000 good trades a day. Remember that. Thousands of good trades a day. It does not matter. It does not matter. Okay? I missed this trade. Oh, fuck. It's over. Oh, shit. You guys want to see my equity curve? It's not too bad. This is after missing thousands of good trades and giving them up. Again, the prospect is, remember guys, we're not showing up to be the market. This is my new quote. I've copyrighted this quote, guys. We don't show up to be the market. We just show up to take our edge out of it. That's it. On repeat. We show up, we take our edge out. If we miss our edge moment, we walk away. We do it on repeat, and that's it. That's it. Where's your deeper drawdown? Right here and right here. Remember, the reality is I'm not going to have super deep drawdown, because in my deepest of drawdowns, I'm still going to maintain around a 50% win rate, which means that in my deepest drawdowns, I'm kind of back and forthing. Sometimes you'll see a deep drawdown that'll then back and forth here and maybe go a little bit deeper and then back and forth here until a new high. That's how trading works. If you have a profitable system, you're almost always in reaccumulation and moving higher, right? But then the all-time high rules stay, where you'll spend a little bit of time here, and then most of the time is spent sideways. You'll spend a little bit of time here, everything else is sideways. You'll spend a little bit of time here, everything else is sideways, and now I'm at all-time highs again, right? That's it. You manage failing trades and still win too. Exactly. Keeps it flatline most of the time. Exactly. And during these periods where you're wrong a lot, where you're wrong a lot, sometimes you can be wrong and you don't even get management, but the management saves you too. Remember what I said. Take a look at this. I've had 11 break-even trades since August, right? About 100 trades, 11 of them were break-even. That means, specifically, I've saved 11%. That's what's happened. I've saved 11% of capital in that time, right? On a $2 million account. Does anyone know how much 11% is? Yep. So on a $2 million account, I've saved $220,000 by simply managing my trades. It might seem not so big when you're trading your initial $100 account, 100K account, but over time, you start realizing how insane it is, right? I just covered a portion of my taxes just with my break-evens. Phenomenal. That's an amazing thing. I just took my family on a trip with break-evens. That's amazing. This is why it's so important that you learn management, get used to management, and keep managing, because it's the only way that over time you're going to add to your bottom line with doing very, very little, right? All right, let me have a read through some of the stuff here. Yeah, so that's one of the things I wanted to point out this week, because, well, this is the exact thing I'm trying to instill in you. I really want a lot of you to realize that, yeah, the reason I showed you this when I showed all these little photos over and over and over again is that there are very specific things I know I'm going to wait and look for. I already know what the setup is going to look like, right? I have the glasses, guys, that shows me the candles before they happen.
for what needs to happen. That's it, right? So I'm not sitting there going, is this a setup? Is this not a setup? Should I take it? Is it going to clear the equal lows? Is it, I don't know. I already know what I'm waiting for. Is the setup there is the question. And if the answer is no, or if the answer is yes, but maybe, I can simply walk away. Because guess what? I don't answer to anyone. Hey, Anton, did you get into a trade today? We need some clients to talk to so we can tell them we got into a trade. No, boss. Take a fucking trade, Anton. I don't care if it's not even a good trade. Take it. I have no one like that. There's just my brain and there's my setup. And if my setup's there, I'm in. And if it's not, well, hoop-de-doo. Let me go play some video games. Let me go play with my daughter. Let me go have some dinner, some restaurant time, whatever the fuck it is. I'm out of here, right? It's not randomized. This is the level I want a lot of you to get to. It's not randomized or a maybe I can do this. It's a well-defined exact knowledge of what I want to see based on my experience and data collection. I think it's a really nice shot of it since this is likely a beautiful setup. So notice this. I wrote this at this point. I said, guys, take a screenshot of this because the likelihood is that it plays out. Because it's moving how? Exactly how I expect it to. Which means that the likelihood of this setting up is very, very high. The context is there. The market is clear. It's in accumulation. It's moving the way I want to see. It keeps doing it. Take a photo of this. Remember it. It's going to make a move very likely. Right? This is not like some insane little hindsight thing where I figured out how to record on 16 different monitors, any of this nonsense stuff. Like, this is just showing up, doing the same thing, getting very used to what prices do when they want to make a move for my specific system, and looking for that setup. And trying to share that with you so you can do the same thing for yourself. Because, again, it's never going to change. The only thing that's going to happen is that new people will come and go, and the people that stick to the fucking process will end up making it, right? That's it. The process, the actual trading sphere has never changed. It's all the same shit. And the best view of that is I just did a live trading video for you guys on this pair right here. On a daily chart since, you guys might not believe this, we started in 1887 and went through it. Right? Guys, this hasn't changed for... Wait, no, sorry. 1987, 18, wow. It hasn't changed for over 100 years. It's the same shit on repeat. There's just a lens that you need to acquire and then approach the price from that lens. Okay, so for anyone that wants to follow along with the chat as I read it, I'm at 10:59 a.m. Time for another great Webby. Thank you, Gengar. Good to see you guys. I see you got your coffees. Capo, very cool. J-Rose, what's up? Pleasure to see you here. I know you're doing very, very well. Getting better and better and better. This was a very good week for you. Hello, hello, hello. What's up, Peas Pod? Good morning, everyone. I hope you're all having a really good week. Matt, do you have G-Class? What was that? Is that like a Mercedes or something? Hey, man, could you please check my DM later? Germany, what's up, man? They were amazing and helps a lot for the backtesting ICI I shared. If you can give me your thoughts. Don't know what that means. Those new videos are insane. Kind of ridiculous how much the 15-minute setups are looking exactly the same as the daily version of it. Clearly fractal. Yep. Remember, guys, the only place, the only mentorship, the only kind of concept that's actually fractal, actually scalable, something that you can seriously rely on as you move up in timeframes and stuff like that, because it's how markets move. I'm not teaching you this weird mind bender version of like, you need to scale down and it's the only 1 minute, whatever the fuck it is. This is how markets move. They will move like that on the monthly, the weeklies. The Warren Buffetts of the world invest on basically a 3-month ICI. That's all they do. I hope you guys realize that. Like, when Warren Buffett invests in Apple, right, he doesn't have to do anything other than basically, he doesn't even know this, okay? He's sitting there reading all the fundamentals. He doesn't even need to do that. He can just as easily, okay, maybe a monthly, because this is too little bit of data, right? He can just as easily go, it's in a bullish bias. Price begins to do the setup I want to see. It's in reaccumulation or accumulation. Wait for the setup. Look at these ICIs right here. These are ICIs. And look what they do. That's it. That's Warren Buffett's entire strategy. He just doesn't know it. He literally just has to do this, and he doesn't even have to hire all those people. Okay? This is all he has to do. There's a decent ICI right here for me, right? This is how markets move. This is a monthly chart. It's the same thing. It's in accumulation. It goes through stage 1. It starts moving long. If you're using a monthly, you can use like maybe a 4-month for a demand validation. Look what happens. Look what happens right here. It validates type 1 demand. You jump down to your time frame of entry. It's in reaccumulation or accumulation, double MB up, move down, and then starts holding it up. ICI, ICI. And then if you really wanted to, this is an ICI, but I would say it's a little bit too high. So I would say meh, good, / great. And then this one's great. Actually, both of these are great, I would say. Right, that's it. This is all Warren Buffett has to do. I mean, he doesn't know that. That's fine, okay? Maybe he'll join the mentorship one day. But this is it. This is his whole system. And then he holds. And guess how he holds? Well, guys, trail with the MBs. Ready? Oh, wow. Oh, wow. Trail with the double MB, right? Like I did with the video that I just shared, and you guys will see that. This is it. You're still trailing. You're still in this trade. Since that moment. Guess what? I just held for, how long? For 7,000 days. Wow, I'm an investor, guys. I held for 20 years. I'm so good at this. It's the same thing. It's on a different time scale. That's it. This is the same approach across the board. I just don't have the money personally to trade like this. I can't get in here, lock up my money, and wait for 20 years. If I had a few $100 million to $1 billion, this is a phenomenal market condition for me. I would be trading this, right? Repeat. Repeat, repeat, repeat. Same thing on repeat. Here's another great one. Good setup. Good setup. I would argue this one's a good setup. This one's a decent setup, probably not good. And then right now it's setting up again. Right now it has a good setup. Right now. This is a fine setup. So Warren Buffett, if you're listening to this, here's your next trade, buddy. Look at the ATR, 19. Let's look at where 19 is. Yeah, I'll protect the low, actually. 19 doubled. Yeah, looks good. Here's your next trade. That's it. Scale into your position. You got it. Right, this is all I do. I just do this on a smaller scale. This is how markets move. Okay? Is the 4-month agreeing with this? Yep, it just made a demand zone. It's validated demand. The likelihood of validated demand is what? To follow through. This is very likely on Apple, even though it's so extended, it's very likely to make a move to at least like 278, 310. That's it. I'm following the same principles on repeat. I hope you're seeing that. There's nothing new about the market or the way that it moves or what to do when you're on a different time frame. This is what true fractility looks like. Dan says at 11:08 a.m. Within that huge large MB is what I took. The huge large one. Oh, and here. Okay, gotcha. FMB on the 5-minute that is insufficient on the 1 hour. Gotcha. When you get buy stopped and manage with momentum loss, do you draw your momentum box based off preference and experience or an actual value? Preference. Hey man, I'm back after 7 to 8 months. The revamped S&D is crazy. Yeah, bro. If you were here 7 to 8 months ago, you're gonna come back and you'll be like, what is going on? But that's beautiful because now you get a ton of value just by being away for a little bit. Thanks for doing this. No problem, man. Oh, crazy. Of course I remember you, bro. I remember a lot of names. There's a lot of different names, but I remember a lot of you guys, especially if you're consistently participating, posting your charts, posting your learnings, testimonials, motivation things. I'm always looking through the things. That's why I'm so hyped from this last week because it's truly been a beautiful, beautiful week. I've seen a ton of people, I mean a ton, do phenomenal on this. The GJ, UJs, and it's been beautiful to see because there's a clear understanding there, and that's all I want to see. Is that there's clear understanding. Why is my MetaFX structure indicator not going back very far? You probably have the triple M on, so it has a lot of labels on it because TradingView has like limited labels. I had to wait 2 hours on a 5-second chart this week. Yeah, there you go. Bitcoin was a good example. Yep, exactly. Of not needing to trade. Well done. Yep, exactly. I caught that GJ move with you. Yeah, exactly. I mean, there's so many opportunities in just this GJ move alone across all time frames. So that makes sense that you caught that. The beauty of data collection, you're seeing things happen before they happen. Yep, you get better and better at that. It sounds like a distant thing that you won't be able to get. But remember, even if you're brand new here, I really want to give you some true motivation. And this might sound hard to hear, but it's true. Even if you're brand new, within a year's time from now, the likelihood of you being able to literally sit there, if you've done the work, and predict the next move and actually know what you're looking for and to know exactly what a market's about to do is extremely high. If you're doing the work, there's like a 95% chance, 99% chance that you're going to be able to do that exact same thing. So even though the prospect of it being a year or whatever seems like a lot, I want you to realize that that skill set in itself is insane. There are people that have spent 12 years in this market, 8 years, 4 years in this market, and haven't even reached a potential point of considering that, okay? Meant, I built a system and became proficient at following all of my rules and hence have been killing it on the charts. Live results were producing literally the same results if I was to have backtested those same days to the T. But last Friday, my dad passed away. I'm very sorry, dude. That must be hard. Sorry to hear that. Since then, everything gone to shit. Well, I'm sure that's a very hard time for you. I mean, the trading can wait on the side right now, right? But you can give that aside. Take your time to grieve. Do whatever you need to do there, and then come back stronger. I mean, this is not my territory, but you should understand that emotions are going to run more high. And if at the moment you're not at the level where, like I like to say, to bring the anecdote into it, if you're not at the level yet where you can be in a war and look at a chart and decide that there's a trade or not within a matter of seconds, then you shouldn't be trading in a moment like that. If you're more of a beginner and heightened levels of emotions for any reasons, even outside of trading, can affect that, then of course you need to be able to take a step back. That needs to be the next responsible thing for you to do and work on the shit that at the moment is pressing and bothering you. Just being on the charts is not going to do away with that. Okay, so take your time, grieve as you need to, go and do and take responsibility for all the things you have to do there, and then come back stronger. Because clearly, we know, as we just read, you have a system. The system works, but given where you are in your own personal system development, you're not at the emotional level yet where you can be in a war, which is what's kind of happening in your mind right now. You're in a war, just a metaphorical one, and instantly analyze and understand what you're doing, okay? So I'm very sorry. But also, you need to take some time, okay? Give it a month to 2 months. And again, that sounds very rude to put like a monthly thing on it, but give it a month, 2 months. Actually allow yourself to process your emotions, get through that, and then come back to the charts. Or stay on the charts, just don't trade live. I can't follow my own rules anymore. I can't control myself, so I kind of discussed that. Could you please give some psychological advice? Yeah, you're at a level right now where that emotional kind of thing that's happening is not going to allow you to just look at something and be like, I can trade this. It's all good. You have a lot of things on your mind that are affecting the way that you're trading, right? If anything happens in my life right now, I would still very, very likely be able to just get on and do whatever on the charts because I know exactly what I'm doing. I've done this for thousands upon thousands of hours. You haven't reached those hours yet, which means that heightened levels of emotions will affect your underlying, will affect the way that you're looking at stuff, okay? Again, I'm not like any therapist or anything. I'm not good with death or anything like that, so I'm sorry, but yeah, that's the most I can do there. I really thought I could focus on work to escape my thoughts. Yeah, that is something you don't do. I know that. And I kind of said that a second ago. Do not focus on work or something else to alleviate that. Give yourself the time to grieve, to get through, take responsibility for what's going on, take control of your life, be there for the people that you need to be there for, and then come back. It will make you a lot stronger. It'll be a very big character building thing for you, and it'll save you money, okay? And we have some beautiful messages from the rest of the team here, so there you are. The shit show is real. Didn't understand it until I went through it. Yeah, that's right. I know, Sonya. I know. It's crazy. The more you start to realize what needs to be done, you're like, oh fuck. Trading is not just this like fun little entrepreneur thing I can do, right? Like there's some shit we gotta do now. Like, you're learning the trade and you're like, shit. I feel like it'd be easier to build a multi-billion-dollar business. Multi-million-dollar business. Fuck. Get me out of this. But then you're too committed. Must power through. I've been here for almost 4 months. Finally finished all. Very good. Not saying I clearly understand everything, but what can I say? 1, I finally finished my 1% of learning. Beautiful. When I open the charts, first thing my brain is looking for is a model. Good. And only this makes me think I'm on the right way. Yes. That is proper wiring. Exactly. If the first thing you're doing is looking at a market and you're like, oh my God, it's moving without me, I need to trade. That's very bad. And that's a lot of people. If another thing is you're looking at a market and you're going, what's the model? Okay. Does that agree? Does it agree? Does it make sense across the time frames I'm trading? It does. Can I trade it? Yes or no? That is already a phenomenal starting point. So yes, very good. 3, looking forward to sort of practicing a lot. Good. You're set, dude. That's beautiful. Congrats, Alex. I also consider UJ to be ugly right now. Yeah, for sure. This price action, ugly. Exactly. Ugly. But GJ might set up. GJ, I think, needs a little bit of time. Let it do its thing, and then boom, it might set up around here or reaccumulate and then set up on a new accumulation. Very easy. Can you explain why you took UJ? Since it was a distribution on the 1 hour, it was basically only because of the basket of goodies. That's really what it comes down to, Ole. So I wanted to take GJ. I'm not even going to lie. I literally misentered on the wrong market because I was just looking at all the JPYs. I had my MetaTrader open with all the things on the bottom, and I just entered on the wrong one, and it looked the same at the time. And then it started moving, and I looked at it. I was like, fuck, it's not GJ. But UJ works too. And I think that goes to say and play further into this idea of the basket of goodies, where basically, if you understand what a basket looks like, the XXX JPY pairs have been doing one thing, and they've been doing one thing only. The setup looked exactly the same, right? They literally looked the same. So all I did is, instead of buy stopping this one, I buy stopped this one. That's literally all that happened. I'm not even gonna lie to you. I'm not gonna sit here and be like, I saw the truth. And guess what? Seeing it as a UJ trade and taking it as the wrong trade, guess what? I gave up, like I said, over 10 extra RR already, right? That can happen. It's just a mistake on my part. And I'll go through the context today and break down the exact GJ trade, because this is the one I was actually sending out to you guys, because I fucked up here. But that's fine. So that is literally why it happened. Nonetheless, though, okay, it's still a decent trade if you want to walk through it step by step, right? Because what you have is an extremely bullish market that we've been bullish on for fucking months now. Remember, guys, ever since here, we've had webinars where we discussed the bullishness for about 231 days. They might not feel like it, but for about 231 days, we've been talking about the bullishness on this, and it's been delivering, okay? That's important. We're at the high. We're at the high, which means what? The clouds of liquidity are getting fucking juicy, okay? They're getting juicy. They want to... So many sellers are like, oh, it must be the high. It must be support. Whatever it might be, okay? The daily is in beautiful reaccumulation. Not only that, but from the most recent SSC, or type 1 demand, right? It's just done what we could assume to be an absorption, and it's just at that low. So that means that if at this point it gets bought up and goes through a stage 1 on a lower time frame, the prospect of that is that it's very likely to be bullish, okay? As you get to an hourly, this is where it gets a little bit sus, right? Because you have a market that is delivering very strongly bearish and then moves bullish. So that's the only thing that's very, very much against the prospect, which is why this trade did not move as heavily as GJ. That's really what it comes down to. But the 15-minute at that same time does what? It starts undergoing its multi-redistributions back and forth into an MB1, MB2, double MB, right under a SSC demand zone within a very bullish market with its next high as the cloud of liquidity in mind, and then sets up the same trade as GJ on a very, very bullish pair. 80% sentiment readings, right? Super bullish. So that is really what it came down to. So I'm not even going to sit here and bullshit you and be like, I saw the truth in the market. Like, no. GJ was the much better trade. I missed the GJ trade because I was just an idiot and I was looking at too many things, and I ended up taking UJ. That's really all that happened there, okay? So that's why this one was taken. Just so you know, though, I would have much preferred to be in this trade with my stop under there or there. This is 10,000 times better. And look at the move it's made, right? This move is insane. And you'd be managed right now to here, at least with my system. So this, you'd be managed at an extra 13.7 RR right now. Guess where I'm managed? 6.5. Now, you know, I'm not going to cry about it. I'm perfectly fine with that. But this is what happens when you misinterpret or take something wrong potentially like that. GJ was the better context. GJ was the better trade. And guess what? It delivered like that. GJ was the thing that I was sending out because that's the thing I was watching. They just looked the same, and I misentered on the wrong one. It's as simple as that. So there you have it, man. Hey, today some Mentafex blah 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 with Anton's profile pic sent me a message and he wanted to know my name and where I live. Guys, I don't do that. I don't do that kind of shit. Come on now. I'm noticing in my testing so far, if you study the way the MAs move with S&D validation and when you're looking to enter with the ICI, it can be beautiful. Yes. And that is what I noticed, which is why I use them. So this one is not Wyckoff. Should I then start studying this? Go to section 3 first. Watch the welcome video in the welcome section. This right here. Watch, read, and get the beautiful, beautiful premium indicator. Okay, guys? No reason you shouldn't. It's free. It's all of you. You just message the bot. Okay, and then you do this. You go /us, and you click on this, and you type in your name on TradingView, okay? And, I mean, it won't let me do it because I already assigned it, but that's how you assign it, okay? There you guys go. Good luck. You should be able to do it now. Let's keep looking what we got here. Anton, question from MSI. Since markets go through different cycles, yes, where momentum strategy may not be as profitable, sure, would you revert back? No. Nope. One setup, one thing, I don't want more on my plate. You can have more, I don't. Because for you to be able to tell whether a condition is actually a back and forth or a continuation one, it's a very fine line, which means that if you have two systems, one that tries to trade during momentum and one that tries to trade during mean reversion, right, or back and forth, what's going to happen is they will intercorrelate sometimes, and that fine gray line will make you take more losses in certain areas, which means that overall your system may fail more, okay? So instead what I do is I look at at one, so momentum, and then what I do is I look for market conditions that may be entering momentum or are in momentum, right? Because what does that mean? When you're in a maybe, that could mean that mean reversion or back and forth is more likely. But if the momentum does come, then I'm making my money, right? So I want to pick one and stick to it. And usually I want to pick momentum. Why? Because it's scalable. It's how markets move. Markets move in momentum and trends. Usually they don't move in the back and forth, and it's hard to predict the back and forth. So by and large, it really just, that's as simple as that gets, right? The K sending his little Excel journal. I'm not going to look at it now. I think I looked at it last week. It looked very good. So I'm going to guess that it still looks phenomenal. And you keep on going, man. Software can only bring convenience and usage. That's it. Yeah. How do you do on the charts is a representation of you, I swear. How you do on the charts is a representation of you. Yeah. Yep. Kind of reminding me of someone. I don't know why. I don't do mentor names, okay? If you would want to have a big D, where would you? Okay. Yeah, menfunding.com. There you go. Thank you, Shellings. Takes time to build a good habit of analysis and get used to good context for a trade is much more important than speed up the process with software for a trade to record. Yep, agreed. Doing that kind of step by step, like looking at something, pasting it, writing everything in, those things are adding, right? I'm sure you've heard from your teachers, guys. Let's think back to our high school days. Writing something down instills it in your mind 1,000 times better than even typing it or just seeing it, right? Whatever it might be. It's the same thing with trading. Sitting there, taking that photo, putting it in, getting used to what the photo looks like, then analyzing those photos is going to do a lot more for you than just trade. Look at my equity curve. Hey, it works. That's, yeah, I guess. Your equity curve is looking like GJ, and that's what's going to happen. A lot of you, even you guys, so now if anyone here is trading like a more triple M, Dan, based system, send your equity curve right now, or anyone that has something that's not ICI based. And what's going to be interesting is that your equity curves are going to move in an ICI model. And the reason for that is because that's how trends move. And if you're a good profitable trader, the likelihood is that you're going to go into what? Bullish trends. And guess what bullish trends are? They're momentum ICIs on repeat, right? So what's interesting is that if you actually are profitable, and you start finding profitability, your curve is going to start looking like markets that move in trends. So the guy that just said, Anton, your equity curve looks like GJ, that's because it's moving in a trend. It's ICIing higher. That's it, right? If you were to try to trade my equity curve, if you could, like, let's say, invest in it because it's a stock, right? What would you do? Well, it's as simple as any of you can determine. You'd sit out of the bad periods, okay? You'd sit out of the bad periods and you would simply buy stop this high. There's your ICI. Buy stop it, right? Can I do a straight line? No, I can't. You would buy stop the high. It starts going. It starts reaccumulating. What would you do? Buy stop the ICI. It starts going sideways. What would you do? Buy stop the next ICI. Starts going sideways. What do you do? Buy stop the ICI. Where should it go next? Right? It should come up. That's it. Right? It's as simple as that. You are your own stock. Yep. Look at this. It's the same thing. How do you buy? Buy stop. You might take a loss. Get ready. Buy stop. You take wins. Buy stop. Buy stop. Buy stop. Take some losses. Buy stop. Buy stop. Buy stop. Buy stop. Look at this setup. This is a phenomenal setup right here and right here. These are great ICIs. Here's a great ICI. It fails. Actually, and now it's setting up an ICI again. What should you do if you want to trade his curve? You buy stop right now. What should it do next? You'll make money. Where do your stop go? Right here. Yeah, it might go down. That's fine. Now you get to sit out of the periods where he goes in sideways, and you get to make money if it goes up. Any profitable curve is going to end up as what? An ICI. Base model. That can be traded with a simple buy stop of each high. Pretty much. Because that's how good trends, profitable bullish trends work. Okay? What do you see? Buy stop, buy stop, period of drawdown, buy stop, period of drawdown, buy stop, buy stop, buy stop. Money made. Buy stop, money made. Buy stop, money made. Stop loss, right? Etc. That's it. That's how markets move. That's how profitable markets or trending markets move. And that is why you guys can see what my system looks like. Take time to build a good habit of analysis. Oh yeah, we just went over that one. Yep. Literally near enough the same curve as mine. It's a madness. Yep, exactly. Your curve is going to look similar to this, even though you trade a different system. Why? Because you're profitable. And profitability breeds a bullish market. And a bullish market always, almost always, works the same way. And guess what? As you guys just saw, some of those curves are harder to buy stop because their contexts are less clean. Because there's maybe more variance. Hence goes, we look at multiple markets, we decide which contexts work the most for us. Hey, bro, some advice needed you, holy man. So I've been backtesting so much and have over 3,000 images, forward tested and backtested. However, when I place, I'm feeling worried. Any advice? Keep placing. Get used to it. Bring down the value of money you're trading with until it doesn't bother you. Or, as you know about my very beautiful and available new business, come deposit $20,000 into my vault. Send me your credentials. And then as long as you follow your rules, you'll get your money back in 6 months. If you break one rule, I'm keeping your 20K. Okay? So that's up to you. Otherwise, just do the things you know you need to do. Right? Get used to it. Build the confidence. Start executing. Because guess what? If you're trading a $100 account, right, or a $1,000 account, you're going to be much more scared to break a rule and lose 20K than you are to lose your 1K. So in 6 months, when you make 100% on your 1K and you're at 2K now, you get your 20K back and now you're a profitable trader. Wow. Ferrari car dealer, can you provide source of funds? Anton shows his break-evens. Yeah, literally. Yesterday, I was walking the street thinking about scalability. Even 200K is just insane to trade. Everything is stick to execution, actually. Then scale. Yep, exactly. Mentafect structure premium is very simple. I think I can understand it. However, can you do a quick walkthrough of it? I'll make a more singular video for it, for sure. Just to make it easier on everyone. But it's just everything that's taught in the mentorship. You have a model, you have the ATR, you have a simple watermark here because, well, we all like to see the watermarks in our photos for people that produce their photos of their system. And you have the MB structures, which you can then further have deeper material behind by having the actual blocks, so the actual counts, and you can change the colors and the direction too if you really want, or just the direction, or have a minimal version of all of it, right? Exactly. I just keep these off because I don't need them. I like my charts a little bit less. Yeah. Your equity curve, yeah, look at this. Oh, this is with men funding too. Let's go, dude. All right. Yeah, look at this, right? It starts off, what do? You buy stop the high. Wait, buy stop, you take it, it loses. Okay, you wait. Starts coming up, buy stop, buy stop, buy stop, or buy stop, based on what you want to do, or wait for a longer period, buy stop. Guess what? You're now in profit and managing your stop loss beautifully. Buy stop, buy stop, buy stop. Look at this. This is just how markets move. It's as simple as that. So like, if this was a stock, it'd be very easy to invest in it. How big is men's personal account? Yeah, about 8 gazillion or so. Ment is the Bank of America, actually. You guys are fucking crazy. Link USDT Ment. Please check the above. I think there will be a lot of opportunities on crypto. There have been a lot of opportunities in crypto. This looks fucking fugly, though. I'll tell you that much. Yeah, so I spoke about this last week, but I spoke about the thing where it's like you need to find the markets when they're good, not when they're played out. This is one of those examples. We have a market that's back and forthing for a while, into accumulation, into potential reaccumulation, into accumulation, into this is where your trade should be. Right here. At least on a 15-minute or like an hourly, right? Your trades should be right here. Through these highs, through this ICI, and then onwards. And then it takes off. Now it's chopping, right? And then it takes off again, so you can follow the hourly for that, right? So here it just chops. This is where I'd stop watching it. Like, you might start watching it again here with that demand validation. Now it's good. Then it comes back. Then maybe here with this demand, you start following it. And then here you probably will take a loss. And then it does this. So now you know you're in chop. I'd ignore the chop, right? Then breaks a new range. Falls down and then makes a nice demand right here. So you can start following here again on a 15-minute. I don't know if that ends up giving you trades or anything, but let's see. Right? Yeah, you have a very decent trade either here, but this is a harder one to see. This one is very wide, and then this is your best trade potentially there into this one right here. And then I would stop watching it again. Let's see where that is. Yep, you just manage. And I mean, like, at this point, you should notice, as you're watching this, that this market's moving quite choppily. And right now, it's ugly. This is terrible. Right now, I don't like it, right? So, yeah. Right now, we're just... I mean, it's moving long, sure. I get that. The hourly is just in, like, this chop Armageddon at the moment. Yeah, I'd probably wait for this to go through long-term stage 1, make a nice break, start making a huge, like, getaway from this dog shit action and start making, like, clean moves here. Then, hopefully, demand zone, validated, jump down lower, follow this stage 1 into a setup. That should be your entry. But this should take at least probably this amount of time. So about another 10 days. If you give this another 10 to 30 days, okay, so about another month, a week to a month, and it can do this, then you have a trade. Right now, though, I see nothing on this. Yes, it's bullish, but there's no opportunity, at least in my book, right? So that's what I would do. Based on your red drawings, are you looking for a mini flush out before entering your ICI, like fractal ICI? Sometimes. It depends on what the move looks like. For me, it depends on what the MAs are looking like, really, John, just so you know. So that's where the MAs help me. Warren hates technical analysis because he doesn't understand that he's doing technical on a different level. That's all he's doing. But again, I shouldn't talk shit about him because he's the most wealthiest guy from a trading perspective, right? So, it is what it is. But if he hired me and he showed me the markets he's investing in, I think I could save him and make him a lot more money, is the way I want to put it. But also what you guys have to be cognizant of, for Warren's sake, is that he's managing like, what, a few hundreds of billions or something, right? An insane amount of money. So for him, it's hard to enter with that amount of size on, let's say, an ICI break. So like we, even on a 3-month or like a monthly chart, can easily enter any of these with a few million or $100 million of risk. He can't do that with his billions. It's not worth it for him. Instead, he's doing what? He's buying in all of these areas multiple times. He's buying 100 mil, 100 mil, 100 mil, 100 mil over the months. 100 mil, 100 mil, 100 mil, 200 mil, 300 mil, blah, blah, blah. And then he's in for the move, right? So it's very different too because of the amount of money he has and how much he's managing. That it might not even make sense for him to do this because if he had to buy a full position here for like a few billions, he would get filled here or something. And he would lose a lot of money there instead of just accumulating like this because he thinks the stock is good. We are lucky because guess what? We don't have hundreds of billions. So we can just get in when we want, where we want, and just ride the coattails of the people that have to sit there buying hundreds of millions of dollars of whatever thing of asset over time. We just get to sit there and go, boop. Hey, let's ride this out, you know? Warren Buffett tries to buy in shares of good... Yeah, exactly. For November 22 at 9:30 a.m. on NAS, 1 minute time frame, would I be right to not trade ICI thinking the market was overextended on the lower time frame? It depends on your rules, for sure. But this is something that's more so, I would say, one-on-one kind of thing where we can go and analyze it together. November 22nd, somewhere around here. Yeah, probably. It looks a little choppy. What time? 9:30 a.m.? 9:30. Yeah, what would you trade here? Either way, it was at the very high. So even if there wasn't ICI, there's nothing to trade. I don't even have to go to a lower time frame to see it. There's nothing there. And then I started watching this actually around, around here or something. And then I was looking for this and then it just failed down. So I stopped watching it. Very easy. Is there actually a better trader than you, Anton? Very likely. I spend a lot of my time teaching. I just know what I'm doing. I know what I'm looking for at all times, and that's it. I don't really care whether there's someone better or not better than me. Because, again, that's where people get lost, is they think that they need to worry about the next person next door, the neighbor next door, the person that's trading on Twitter, the person that's trading. That doesn't matter. It's all useless. If you're profitable, you're profitable. Follow your fucking rules, right? If everyone was dead, if there were no traders and you were the only trader with your profitable system, would you be happy? If the answer is yes, then stop worrying about others, right? That's really what it comes down to. Life savings now on Apple. The next trade. There you go, Al. This is the Apple trade we just spoke about. You're welcome, Warren. Enjoy yourself, bud. Meant, will you start your own broker? Maybe. I don't know. The support customer backend of that is a whole shit show. And I don't know if I want to manage all that. Stand on one hand while executing the trade. You're funny, dude. You're funny. That was literally me. Went away for a while and came back like 3 months ago. You took things to another level. I'm glad, dude. Although the ICI system is good, I love and will stick with the old SSC. Don't forget, sir, everything we do, everything is based in SSC. Everything. Everything. This GJ trade, you know what it's based on? SSC. How so? The SSCs are delivering long. That's really it. Right? Demand is holding long. This demand, as it gets created, creates its own SSC right here. And what do you expect out of that SSC? Right? One, that price could come back, and that could be your version of an SSC entry. But two, that demand is valid. And it's going to do what? Clear through this high, and then based on context, clear through the next highs. And on we go. Right? And beautiful markets galore. On the initial flush out, for an ICI, would you enter on the break of the first MB or the break of internal structure as a personal preference completely? Sometimes I'll enter on a bearish MB into a bullish trade, but very likely, almost always, I'll wait for the bullish MB first and then start following. Because why? It's just giving me more confirmation that money's behind the trend, right? The course is so engaging that you will lose track of time anyway. There you go. I'm going to catch up on a webinar later. I'm not able to concentrate. I'm busy with my little girl. Have fun with your little girl, man. Thank you so much for the advice, man, and the kind words. Also, thank you to the team. Yeah, no problem, man. Take your time. It's a hard time for you for sure. It's insane. It must be, something you've never experienced before. But you will come back a lot stronger. Give yourself the time you need now, though. It's very important. How's your Thanksgiving? Oh, yeah, guys. Happy Thanksgiving to everyone. Mine was great. We got to eat with family and everything. So, I don't know. What's your max bench? I don't bench, bro, so I don't know. Meant I built a system and became proficient. Oh, we went over that, right? Yes, we did. I'm trying to get the men structure premium for my trading view. Okay. I'm sure you'll figure it out. Do you still play League? Yes. Exactly where my stop loss is as well. Yep. If your stop loss, like on GJ, yeah, it's a good stop to have. I mean, you're probably going to get tapped out. It's likely going to reaccumulate, but if it doesn't, and I hope it doesn't because then my UJ trade should go up. I hope this thing, again, just goes like, boom, just takes off. That'd be beautiful. I'll take it. You know what? You know, be even better? Let the MAs cross over. So all the crossover traders start getting short. And then make a boom. That's what I want to see. We all love our crosses, don't we? Ironically, I find myself preferring the basic structure indicator over the premium. John, I think you're forgetting that you can go like this. Okay? You can go boom, boom, boom. You're back at square one. Oh, sorry. Hold on. Boom. There you are. Right? I just like it where it's all in one spot. So I have my models. I have my watermark for images. And I have my simple setup of everything I need. When you use demand validation on the daily or the 1 hour, do you also want to see the MA start sloping up or MA only for execution? It don't need it to slope specifically, but it also matters where the price is. I think the ICI extras, the videos I uploaded this week for you guys, the 3, are very good for you. You should watch them. You'll see what I do. And I walk you through it. I talk about it a lot. Win rate at 47%. Yep, exactly. 48%. And I am more than happy with it, you know? The lower my win rate goes, the more I make. It's kind of insane, isn't it? We went over that. Peace pod's crazy. Ignore the total R, as this is basically year to date, including when I used to trade. Oh, yeah. Oh, yeah. Look at this, guys. Hey, how do I trade it? ICI. Hey, I'm still making money on this trade now. Move with the MB. Move with the MB. Move with the MB. Move with the MB. 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 I'm just trailing at MB. 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 Damn. Still in this trend. Right? I mean, like, that's it. Right? If I could, quote unquote, copy trade Dan, okay, or invest in his curve, well, I mean, you have endless places to do that. It's simple. It's a simple market. Guess what? It just set up another ICI. You buy, stop loss here, you're already up 1-1 or R. Guess what it's going to do next? Likely come up, fall down a little bit, you get taken out or break even, and then it keeps going. That's it. It's the same thing on repeat. Hey man, I don't see ATR on my Medflex Premium. Any fixes? Yeah, enable it. Do you follow any stocks? If yes, what is your read on Tesla or Nvidia? I don't really follow stocks, or a lot of them. I'll start following more soon, but I did a play-by-play live trading for you guys on a stock as well. But just go to the stock and look at it. I mean, before I even touch anything here, I'm going to tell you one thing about this. Can anyone guess what I'm about to say about this based on my time frame of 15 minutes? Just looking at it from a quick one. Yep, exactly. I'm going to say it's ugly. That's it. This is terrible. I would not be trading this market at all, right? And then I can start taking a look at a few time frames here. Yep, this is exactly what I would imagine. It's ugly. It's back and forth. It's hard to predict where it wants to go. It's in stage 1, but it doesn't tell me where it wants to head right now, right? And this is actually in bearishness. So you have disconnects, right? Daily's kind of bearish, maybe bullish. Hourly is bullish and bearish, kind of back and forth. 15-minute is dog shit. So I don't look at it. Nvidia, 15-minute. Can you guess what I'm going to say about this market? It's ugly. I'm going to stay away from it. Let's see what the 1 hour is doing. Bullish into reaccumulation, starts moving bullish into now potential reaccumulation or distribution. Yeah, nothing to touch. Extremely ugly. Jump to a daily. Potential stage 1 into accumulation now. So this needs time, right? Actually says it's in redistribution. So yeah, look how ugly this is. Everything is against each other. So as simple as that, I walk away from the market. That's it, right? I would not watch either one of those stocks whatsoever. So my opinion on them is that they're ugly. Hey man, can you talk about how you like to see the MAs when they're sloping upwards and sideways for your setup and when the MA is not valid, even if the setup is clean? Yeah, you can see that in the live trading video I just released. All three of them. You have a ton of examples of it and I'll walk you through it. But there's no science to it. It's just what I'm used to seeing. That's it. Yep, exactly. Look at this. Absolutely beautiful. Hey man, a bit off topic. I purchased it 3 months on Black Friday, but still got charged for this month. Go to the Launch Pass live chat and stuff. But like I said, it was meant for people that were not members for this exact reason, my good man. But I'll try to help you out after this, okay? Hello, thanks for all that you do. Is there a video that shows all the MENT indicators for TradingView, MB, etc.? It's more the entire course. You learn what MBs are and how they function and what the rules are behind them. So, yes. MENT FX. Unlucky to be lucky. Warren Buffett equals composite man. Yeah, of course. Yeah, exactly. Warren Buffett is a version of the composite man for the stocks that he invests in. Why? Because he has so much capital and money that he's investing in them, and he's getting involved not on the breakout usually. He's getting involved in the stage one, that he is in essence the person that's undergoing the weak to strong hand transfer of that weak to strong hand and picking up those shares until the move is ready. And that's where we can look at it and go, hey, it's ready. Let's go. Right? And that's it. Hi, I tested all the entry criteria on section 5. Doesn't work for my type. Okay. I'm more of a higher time frame trader on the US 30 on a 4-hour. Any advice to maybe make my own confirmation? So again, this is what we need to do less of. You're not a higher time frame trader on US 30. That makes no sense. You're just not that. Okay. That's not what you are. If anything, you're a higher time frame trader that specializes on entering on a 4-hour chart. The US 30 has nothing to do with anything here. Of course, nothing's going to work if you're trading in a context that's dog shit. And I can guarantee you, at this given moment, the US 30 context is dog shit. You know why? Because it's going back and forth. But without me even looking at it, I know that. Why? Because US 100 and most stocks are going like that. If I look at US 30 now, what is this? So if you're entering on a 4-hour here, guess what? You're going to be getting chopped out of trades 24/7. You know why? Because you're trading a market. You're not trading contexts. So it's not the criteria or something. It's not the criteria and stuff that doesn't work. It's the fact that you're forcing shit when you shouldn't be forcing shit. What are the entries here to be taken, right? What is it here that we are taking? We're going from bullish into bearish into bullish into bearish into bullish into bearish, bearish, bullish, bearish. What are we trading here? What context is being traded? The only entry I see here is this one. Maybe. And even then, actually, that's the only okay one because of this context. But even then, look at the context that had to set up for that to be a decent trade. It's ugly. Bullish, bearish, bearish, bullish, bullish, bearish, bullish, bearish, bearish, bullish. Yeah, it could be accumulation. It could be, and it ends up playing out a little bit, but it's fugly, right? So again, it's not the section 5 or any other area that is a problem. The problem is that you think you're a US 30 trader. Right? That's innately what the problem is, especially on a 4-hour chart, which means that oftentimes, if I can wait up to 2.5 months on a 15-minute chart for a market to even get decent or more, you know what's going to be true about a 4-hour? That's times times 16. What's 2 months times 16? 32 months? So you could have 3.5 years of bad price action and be sitting there going, I am the 4-hour US 30 trader. I am the 4-hour US 30 trader. And guess what's going to result if you do that? Well, for some periods of time, you're going to be getting whipped the fuck out nonstop. That's what's likely happening. So your advice is stop focusing on a market, start focusing on the context. What do you think about DHI? Sure, we can look at some stuff. Why not? Yeah, this is looking like a good market. This is beautiful. Accumulation, in reaccumulation, beautiful demand validation. Daily is doing a little bit of sussiness, but the moves from it are lining up with the bullishness, so that's good to see. You're kind of extended here, though. I would say you're a little bit extended. Take a look at the hourly here for a second. Yeah, I would say this needs to go through a stage 1, and then it can make some good setups. So hopefully reaccumulation into break up, make some kind of MB long, come down a little, demand validation, jump to your 15, and the rest is going to be history. Watch for the stage 1, Bink, ICI, take it long, right? Right now, though, I'd probably be on sidelines for it. Hey, man, I understood your ICI model to webinar 120. Now is the same, but shows a little different. Can you show me what pattern you will take ICI and what the MA is trying to do? Something like that. Hey, afternoon, guys. I've been having trouble getting the structure premium. Okay. Just make sure you just follow the things that I wrote out and showed there. The first live webinar I was able to attend. What's up, Tommy? Good to have you here, man. Hey, Don, where in the trading view setting are the... it's in the indicator setting. Hey, man, will you do the one-on-one thing with old members? Can I use mine to play one league game with you? In the same rank as you. Sure. I started reading The Complete Turtle Trader as you recommended a long time ago, and I understood why you stress us to follow and stick to rules. Amazing. Yep. Beautiful book. Beautiful rules. Follow our rules. First webinar, I had no clue what you were talking about. 2 weeks and 40 hours of studying, starting to make sense. Also, you have a very good style of teaching. I appreciate you, Al, or AI. Al, probably. I appreciate you, man. But I'm not trading ICI. I'm trading inside my box confirmation, not ICI. Simple SSC. Okay. So then you'll get even less trades because SSCs that tend to set up on a 4-hour are going to be very, very, very uncommon, right? It's going to take a lot of time. Like, since the start of a bullish run, the only SSC that has actually worked from a standpoint of a setup is none of them, right? So you'd be on the sidelines for 27 days. Yeah, for a long, long time. Unless you're using potential versions of 2.0s or something. But yeah, I don't see any trades here. I just don't see it, man. Can we take a look at gold? Yeah, I'll take a look for you right now. Why not? Oh yeah, gold is nice. Good longs. I kind of sent this out. Start of the week, there was a beautiful long here and here. And then it went through this mini chop and started building something up. This one's a harder long. I would not take this. This is a great long right here. And this one was end of the week. So if this was not end of the week, I actually would take this. Okay? But other than that, I don't see it. But this is bullish. It's very bullish. It's good. It should continue bullish now, or it can undergo some back and forth, start moving, and then I would wait for a new range then. Because now we're in this long-term range, and oftentimes when you enter a long-term range, it likes to wick and play around more often. So if you're in here, you're good. If you got in here, you're fine. But the likelihood now is let it make a new MB now to keep following. But it's very bullish. I like the bullishness on this. 1 hour is beautiful bullishness. You can see, right? Demand validations, moving long. This should just, boom. It should take off this week. Daily is in that beautiful accumulation model, right? You had that long-term weird reaccumulation that's now following through. Very likely heading to all-time new highs. Gold in the next, I would say in the next month, maybe a little bit more, month and a half, should be at like 2,100. It'll find its way up there. So I would just trade accordingly with that. But it looks good. It's finally entered that model. And if any of you have been getting involved in or around these points here off this stage 1 start and then continuation for stage 2, you are in a good spot across any of those time frames. So right now, if you're trading like 50-minute, I'd be waiting. If you're trading a lower time frame, there may be setups available this week. Yeah, like this. This is perfect. So you have a beautiful stage 1 into now stage 2, and you actually have a beautiful trade, just like I just said right here. And now this week, hopefully, if it opens and starts going well, you should be able to get another trade like here. There might be another 5-minute trade available right there. Okay? So yeah, gold looking good for longs. If you're 15-minute, I'd wait for a new range. If you're 5-minute, you probably have one more opportunity here if it can set up, and then it should follow through. And then by the end of a month or 2 months from now, it should be at all-time highs. I'm probably quite certain of that. Most of my focused SSC are on 4 hour plus. I'm looking for lower time from fractal confirmation, which you used to do. I'm saying US30 because I want to focus on that first and then on other markets. I appreciate though making fun of me. Oh, making fun. Yeah, I wasn't making fun of you. Remember that. I'm making sure that you don't buy into the way of thinking where you have to be on one market, especially on a higher time frame, because that can eat alive at you, right? And you'll actually also notice, I think I've had many webinars in the past where I spoke about the fact that US30 undergoes more absorption entries than it does SSE entries, right? And personally, I've made the switch to ICIs from a standpoint of entries for a reason, right? And it's because I've noticed that trending markets tend to trend a lot better and enter me into those trends via this criteria. So for something like US30, which is very likely to be a trending-based market as it's a composite of stocks, when it does trend, that's how I want to be getting involved, right? I don't want to look for those absorptions and stuff, personally. So thoughts on AU? Probably as ugly as EU and GU, so I would stay away from it. Yep. No rhyme or reason. In potential redistribution, but not really doing anything like that at the moment. A lot of back and forth, so could be doing anything. Would not touch this market. I don't like it. Yeah, I don't see anything on this. I would not be touching this market. Hence why EU's being untouched, GU's untouched, EU's untouched. And hence why GJ and UJ are being touched because they look beautiful. I wanted to say a big hello. I come from the public YouTube. I've looked at every one of your uploaded YouTube videos from the beginning. No skipping. It took me half a year, and after I understood I need to be here, this is my first webinar. Welcome aboard, man. You were in the right place. You will not regret your decision, okay? Forgot I left a 0.01 trade open on gold from 1967 with men funding. Soft breach. That's fine. As long as it didn't invalidate any of the stuff, you're fine. Has anyone ever received this error message? Yeah, just make sure you're added to the thing and then reload. Make sure you assign the bot to yourself. Hey, man, thanks for everything you do. I've been a strategy hopper for 3.5 years, and since I've joined 4 months ago, you have changed my trading drastically, especially with psychology. Mwah, that's beautiful, dude. I'm so happy to hear that. I believe I will be profitable soon once I get my trade management down and stop closing trades stupid early. Good. Coffee asks UJ. Yes, UJ is very good. Longs are clean on it, but right now it's ugly. Give it some time to either take out my stop loss and then start making new demand and then start following lower time frame because there's likely going to be stage 1 on a 15-minute or lower, or let this start playing out and then start following it up inside of these price action places there. But right now, it's in this range for a while. It's been stuck in it for a while. The lower time frame is just back and forthing uglily, so I would wait. Let this start some kind of run, and then you can start to get involved, or let it come and start to go through a bigger stage 1 inside of here. So bad context is just price going back and forth. Partly, I thought that was signs of accumulation distribution. It is, and it depends on what the higher time frame is doing to confirm that or deny that. Using SL as hard ATR times 1.5 every time makes my life easy. Yeah, it's a good way to do things too. Live ICI when models are in. XRP in some kind of bearish break and then you just buy stopping this. I mean, yeah, it looks like it might work. Good for you. Can you please review AJ? It's probably going to look like UJ and GJ. I haven't looked at it because, it's like whatever, but yeah. Yeah, it's all right. It's not bad at all. Looks like UJ and EJ. Yeah, so you were just in a larger range here. Now it's moving along. It's the same thing as UJ and GJ. It wants to take out the high. Exactly same thing. 1 hour is in a good accumulation. Yeah. If this can come down, make a demand zone, right? Or even right now, it's still okay because it's made a demand zone. It's made 2 supply zones. So yeah, I would wait for a demand zone. Wait for a demand zone to get created. Jump down. Same thing goes. Beautiful context. So let this reaccumulate and you'll be able to get the same entry. Same exact thing. How can we avoid tax? Make no money. I remember when I told you I didn't like the ICI system and I like the Triple M more. Now it's the other way around. I love the trending-based system. Also, with comparing it to other contexts, makes me stay out of a lot of price action that's choppy. Good. Hey, man, from Malaysia here. I would really appreciate it if you could show some management after you took a trade. So, what's up, Darren? First of all, welcome from Malaysia. The 3 videos I uploaded this week, about 3 hours worth, are all just trades, walking you through them, and the management on top of it. I'm going to walk you through my UJ trade in 1 second, but that's there as well, okay? I can't find the structure indicator on TradingView. That's because you have to assign it to yourself, like I showed in this webinar, through this right here in the welcome section, okay? All right, guys, let's work through and break down UJ very quickly for the entire team. And yeah, let's just do that. Well, actually, do you guys prefer I break down UJ or GJ? Because personally, I think GJ was the better trade, even though I didn't take it. I think that there's much more to learn from it because it's actually the proper context. And like I said, I took the UJ off of a misplay. Let's call it that. Okay, so GJ is where we're at. Okay, cool. Yeah, we'll talk about GJ with management as well and how I would personally manage it. Sure. Maybe both. Sure. I mean, it's the same thing, but I can go through both because remember, I didn't mean to take this. So I kind of went through the context of it prior, a little bit earlier. But the context of GJ is why I like the trade a lot and what actually made me take the trade. Okay? And we'll go over both. We'll even go over this one, which was a decent one as well. So I'll walk you through exactly how I thought, why I think this one and this one were the good entries in relation to my MA-based system, like and how I how I think about MAs as well. Hey, Anton, do you think we'll get confused learning your old system and this current one at the same time? No, it's all the same thing, kind of. I have a question about buy stops and live market orders. I feel like putting in pending orders is better for me and keep me from chasing or trying to get in when it's a bit late. Can you show some light on using pending orders? Pending orders are limit orders, which means that they are not guaranteed to get filled and price needs to pull back to them to get filled. I like to enter with the trend, with the momentum, which means that if I'm buy stopping, that means that as I'm buy stopping, other buyers are there because they pushed price into the buy stop. So if price takes off, which is usually what happens if I'm correct about a trade, I'm not ever getting a pending limit order on the opposite side. So there you are. Go both if you can. Sure. Maybe also you can mention why some setups you don't take. Well, that's a little bit weird because I don't take all the setups that I don't take, right? Like that's literally all it comes down to. If you mean like why didn't I take any of these, maybe, well, overextended, way too overextended. MAs don't look clean enough, too choppy, don't want to play it. Maybe a trade right here is decent. Comes down. MAs sloping downwards, don't like it. Bearish MBs, too overextended, too choppy, no place to put my stop loss. Just nothing there. Maybe a trade, but MA sloping down, don't like it. Good trade, too extended, right? Like I don't know if that's going to help you that much because again, like there are thousands of trades even on this photo right here that I didn't take, right? The question is, why am I taking the ones that I'm taking? And the reason is because the setup that I'm looking for is lining up, right? You can do this with any pair. There's a setup every single day. I say it all the time. There's an ICI everywhere at all times, but the question is it meeting the conditions for a good one? I want to see his thoughts. I'm learning from him. That's no problem, dude. How do you determine when the market is too extended? A lot of experience and taking photos and getting very used to it. Knowing when a setup is clear out of the get-go. I want to see usually early trends for an entry. This is the first time it's setting something up. I'm getting in. I don't want to get in on the future ones. This is the play out of this entry. So I'm not going to get in on the ones that are in the future unless it starts stage 1ing again. What is a good broker for a personal account? Anything that's regulated in your given country. If you're in the US, you can go Think Markets, you can go IG, you can go Wanda, Forex.com, any of those. That's just, you can look that up. That's very, very simple. Two-door? Do you give out plaques for funded members? Yeah, they get a beautiful little golden name. I want to hang mine. All right, I'll send you all a Mentafex cup or something cool like that. I'll figure something out for you guys. Is there any cocaine stock? Nope. But cocaine comes from a flower, doesn't it? What flower does cocaine come from? Is it poppy? I think poppy is heroin. Coca leaf. Coca leaf market trading. Coca market trading. Coca-Cola. That's not it. Is it cocoa? Is that the same thing or no? Yeah, the leaf is illegal. Oh, cocoa leaf is illegal in the US? What companies sell coca leaves? It's illegal to buy. So I guess we're not going to be able to find something like that. Well, actually, Coca-Cola has Coke in it, right? So you can trade the Coke stock. There you go. So wait for a good setup on this. There you guys go. They still put it in there. I don't believe them. They still put it in there, bro. Come on now. Y'all are funny as fuck. All right. Let's get into the breakdown. So, GJ. Now, what led me to sending out everything that you saw me send out this week in the trade plan area? First of all, I mean, you can already see with my own personal trades that I've been very bullish on this thing. We'll talk about why I'm bullish. But before I go any further, notice how I even had a beautiful little long here. Took an instant loss and then got to go sit on the sidelines until new setups came about. This is part of the game sometimes. All right, that's first and foremost. Now let's talk about why I was bullish on this thing to start with. So let's go. We can go with the weekly first. So first and foremost, weekly is in just clean bullishness, right? We've been talking about this for the longest time ever. All the XXX JPY pairs, it's the same exact thing on repeat. Most are moving bullish in a bullish fashion, SSing to the top side, moving beautifully and continuing. So weekly wise, all I know is that this is moving bullishly and is likely to keep moving bullish. So good. Let me go and prove that model to myself. As we move to the daily, we have a back and forth stage one that ended up in a beautiful run up into a breakdown and a breakdown. Very likely to be a reaccumulation. So I follow that. And as it starts breaking, I started following this thing. Started breaking down again. Could be distribution or further reaccumulation. Breaks up again. So now we're entering reaccumulation confirmation or accumulation. And that's where I started following longs again. Hence why you see longs being taken here. Makes a bullish break again. That's a double MB within a bullish context. Very bullish. And now we are in actually another MB up. So, because that's how it ended. But before that, we were just in 2 MBs up and moving long. So the prospect was that prices want to continue moving long. Very much as simple as that. So I want to prove that to myself on a lower time frame as I get down there. As I get down, we have a beautiful moving bullish market, reaccumulating, has some great setups here that I personally missed. And then on this mini sideways action, I tried to take a buy stop through this high, failed instantly, and then went into a longer term sideways market on this range and broke down. So I stopped following this completely and waited for a valid demand zone to come in. Now, your first valid demand zone, you could argue that was available for a potential trade could have been like here, right? That was a valid demand zone for me. Why? Usually, I won't take a demand zone that just forms off of very low unless there's a really good reason for it or unless it's coming from a clean demand zone. So I would wait for it usually to get up into one of the MAs or an MA that starts sloping a little bit sideways or even upwards. So you can notice during the creation of this one, both were sloping still down. This one was sloping hard down. So I'd probably ignore this. And even then, if you step down to a lower time frame, it would still probably not even provide an opportunity, as you can see. At that point, you had a market that's moving bearish. And guess what? It's sustaining its bearish move. So even though it set up a potential reason to look at a lower time frame, there was nothing there whatsoever. And I simply ignore it. Okay. We head back over to the hourly now. Prices continue moving lower. And then here they start going sideways for a while. The first bit of sideways is the fact that you have whatever demand zone or demand zone that formed here on the left started to have some form of money come in behind it. New demand zones were validated. I still did not look at anything here. Started going sideways where now you have a 50 that's leveling out which shows me that at least some kind of average of buyers are coming in, and the 20 is starting to level out / slope downwards a little bit. Then all of a sudden you get a valid demand zone on the form, and price moves higher and higher. So at this point or so, I began to take a look at the lower time frame, right? We jump down, so we prove it to ourselves. And this is where I sent out, as a lot of you know, my first photo, where as I look at this on a 15-minute now, you have a market that is now undergoing back and forth, potential back and forth. You only have an initial bullish push and then a bearish push, which means what? Redistribution is present. So the likelihood now is that price should go like this. However, given the context, the extremely bullish context on this, if it can break this high in this context, that would then create, for me, at least for me, right? One impulse can create an accumulation with a bullish break, and then that could put in motion a potentially bullish market. So we have an invalidation point, we have an overall bullish market, and we have the prospect of a redistribution that's currently playing out. But if we can break the high, it's very likely to enter accumulation. And that's why you saw me post my first photo, which was this one right here. That's the exact moment that this was sent. Looking for that break, and that's when I would start watching it. So let's wait for the break. The break occurs, and you can see, even with the indicator, the market has switched into accumulation. You have the back and forth, the redistribution wasn't able to hold itself through, and you have a bullish break within a very bullish market, within a bullish context that's still moving bullish and very likely to be bullish. So I'm happy to be involved here. Now, at this given point, when I looked at this, boom, this is what was sent. When I looked at this, okay, here we are. The reality of the setup is, yep, it can ICI now. I don't really care. We have a very, very strongly upsloping 20, a very strongly kind of upsloping 50. So at this point, I expect that there's going to be some kind of bigger correction, because oftentimes when you get this far away from upsloping MAs, it doesn't sustain the move, and we need to undergo some more stage one. And for me, a fractal stage one usually looks like this leveling out, or this one leveling out, and then a setup occurring, either inside, just under. Even if they cross over and start doing something like that, that's where usually setups occur. So I'm going to wait for something like that, which is why I understand that for that to happen, for this to start sloping a little bit more sideways, for this to start sloping maybe sideways, for that to happen, price needs to, on average, okay, because these are averages, it needs to come down, play around with them, come up, go sideways, and then go. And oftentimes, if this can happen, you're going to get this to interact like so with price, very likely, and that's what my setup is going to look like. Hence why you saw this photo. Do they look the same as I drew that out just now, based on what I want to see in regards to the MAs go? Do they look the same? Right? Because there's an understanding of what I want to see exactly from price, because I know that if price can do this or this, it's going to begin to interact with the MAs in a way that's going to create the averages to start moving more sideways, which means that across time frames, more people are getting weak to strong handed out, which is what I'm looking for within a bullish context. Phenomenal. So what's next? Price begins to come down as I want to see it. The MAs are still sloping heavily upwards, so I'm not going to look for anything here. I'm looking for some kind of intermediary fractal reaccumulation, which is going to happen if this occurs. So I'm waiting for that to happen. Price moves down beautifully. This MA starts to move a little bit more sideways. This one starts to kind of slope still upwards, but a little bit more sideways, which is what I want to see. Comes down heavily. Boom. Okay, coming down heavily. Exactly what I want to see out of this market. Okay, and then comes up the right-hand side of price. So starts moving a little bit higher. Now again, not drawing the proportion, is what I wanted to see from the MA perspective occurring right now or not? Whoops. Right, yep. You have a generally upsloping 20 that just entered a little bit of sideways action into even a little bit of a downslope. You have a 50 that has leveled out from being super upsloping to just a tad bit upsloping, which is why at this point specifically, I sent out the fact that I want to see price come down a little bit. Why? Because if price comes down a little bit, this average smooths out. It's as simple as that. There's an understanding there from a standpoint of experience of what I want to see price do for averages of it to be true, right? Hence why, if we keep playing, this starts to average and level downwards, okay? Where did I send this out? Yep. Okay, good. And then at this point, there we are. I sent out this, okay? So at this exact point, I sent out this. Okay, because at this point, we have a beautiful, beautiful setup. Exactly what I want to see for an ICI personally. And the ICI itself, where is it? Okay, it's the exact same setup on repeat. There it is. This is acting as the liquidity or cloud of liquidity high. This is going to act as the intermediary liquidity that we're just going to buy stop through. And that's the move that we're probably going to look for within the overall accumulation model. Okay, so at that point, that long could be set up as you need. Okay, and what I would do in this situation is now I'd look at the ATR, which is 0.129, and I'd look at where that finds itself. So 0.129 is about right here. Now the question is that low protecting anything? For me personally, I would say no here. So instead, I would now double it. So 24 is about here. Now that protects a good amount of price action, but as I look at this, the way I normally think about it is where did a lot of the volume of this area of consolidation play around? And what you may notice is that there's buying that came in here just through the wick, buying that came in here through the wick, buying that came in here through the wicks, and then all the bodies seem to be sustained just above a line of best fit like this. So a stop loss that's under 24, which is a double ATR, is fine. So a stop loss of this nature or a little bit higher, just like that, is perfectly fine. This is a stop loss that I'd be open to using. This is how I showed you guys and used stop losses in the videos that I uploaded this week for you in the live trading video. This would be a perfectly fine setup. And it's now interacted properly with the MAs. It's set up the ICI. You have a low of the ICI, right? There it is. So this setup should, if it wants to, either set up again here or just go. Either one, I don't care. The prospect of this is that it's a good setup. Okay, starts moving long. So now you have a choice. As this is setting up, you have the choice to maybe move your stop loss below this candle, which is still in the good ATR range. If you look at this 22, so you're good. Or you can move under this candle. That's up to you. In this case, I'd be okay with either one. That's completely up to you. So in this case, you could even go for a 50% like that, between that low and that candle low, and just go 50%. Okay? You don't get tapped in yet, so now you have the choice. If you're not tapped in yet, if you went like this, then you're tapped in, and that's fine. If you haven't gotten tapped in yet, which is the case here, you have the choice of bringing this up now to this low, this candle low, or this candle. That's up to your preference. For me personally, I'd probably move it to this candle now because, well, that's the last time that it paused for a second. Buyers came in. I'm giving it a little bit of space. It looks good. And it's under the double ATR. Good to go. Okay, then price taps you in. Phenomenal. And that's exactly what happened as we see here. The setup should occur just around that point, right through that high. And that's exactly what happens. And then you get tapped in. Now it's on the UJ management because of my UJ management, which you can follow by watching this. So we'll go through the UJ management very quickly and then go back to GJ. Price taps me in. Price begins to move long. It reaches over 1 to 3 RR just around here, which is one of my ways to move to break even. Or if you envision a momentum line just following price, a price that comes down and touches the SL now would be a loss of momentum for me personally. So I move to the stop loss to break even, and I'll show you that on GJ in a second. So let's move to break even. Let's actually watch for the break even now on shit. I didn't mean to open this one. Let's watch for the break even now on GJ. So what am I looking for? Either 1 to 3 is reached, which means that I've reached a multiple of my risk where I'm not willing to take a loss now, or the current line of best fit, which I can personally draw, makes sense that price would not want to come back. So at the moment, if I drew this in, a candle to lose momentum would have to come here. So there's no reason for me to move to break even yet. So I wait. And I wait. And again, I can kind of spiffy this line up, and the same thing happens. If the next candle opened here and did this, is that a loss of momentum for me? I would say no, because it can easily wick and then keep going. This is based on preference, experience as well. Now, if you're not at the level where you can use that, because again, I don't want to sit here and be like, oh, it's all experience, it's all experience. There's another system that I used to use and that any of you can use too. You break even at 1 to 2. You take a partial at 1 to 2 and you let the rest run. It's as simple as that. You don't have to have complexity in your trading initially. You can, over time, refine your system. That's all I've done with my own system, okay? You just need to realize that. Not all of you have to use this weird like little thing that I do. Just remember that. So it keeps going and it reaches 1 to 3. So at this point, I have a stop loss to break even. It's as simple as that. And now I have to ask myself the question of how do I want to manage this? Now, a lot of management in regards to how I think about management has been shown in those 3 videos I uploaded this week for you guys. And I walked you through exactly how it works. One way that I'll manage is a loss of this initial momentum. Okay? So like here, as long as it's over 1 to 2 RR. Another way I'll manage is that if price begins to move so aggressively away from the MAs, because what do we know from what I'm used to? If price does that from the MAs, it's likely to snap back. I want to look to partial quickly into the candle. So that means that if this price now for some reason does this, I'll move my stop loss or partial to like this level and allow it to take me out for a snapback before it either continues or fails. Okay? That's basically how my management there works. That's how my management thinks. Let's go a little bit further on my UJ. UJ, as you can see, begins to move heavily away from the MA. So what did I do? I moved my partial, my first one, under this candle's body, under the candle's low. What does price do? It keeps moving. So I moved it into the middle of this candle. Now, when I do this, I'm expecting to get taken out. I'm not expecting it to keep going. I want to take the money off of whatever is happening here, which is why, very quickly, I get stopped out of my first partial. Okay? And right there, my first partial is met. I've already made 2 RR on this, which is insane. So that's UJ. And then I can let the rest run. Okay, let's take a look at GJ now. So at this point, you could assume that it's very, very extended. And similarly, if I move my stop loss to 50% of this candle, how much am I taking off the plate? 2.82, which makes it about 1.4. So I'm not that happy with just a 1.4. So I'll move it to the low of this, which also lines up with a potential mini loss of this trend line now. So in this scenario, I actually don't like moving any stop loss just yet. Instead, what I want to see is I want to see a bigger move away and then move my stop if I can. So for GJ's management specifically, that's what I'd look for. So I'd wait now. I'd wait. So this is nothing. Okay, another move, but it doesn't sustain its move. Okay, so I'm waiting. Nothing to do. Okay, and then the trend line starts getting a little bit more like into this area here. So now I need to think about what would a loss of momentum look like. If the next candle did this, is that a loss? No. This, yes. Around there, I would say that's a loss of momentum. So let's see what that stop loss puts me at. That puts me at a gain of 2.2 RR, which is 1.1 if it comes to take me out. At the same time, from a standpoint of overextension, it's quite extended. These are sloping directly up almost. This is pretty extended here. So if I move to this low, how much more am I making if I take it off there? I'd be making an extra. So I'd be making 1.5 if I move to that low, or I'd be making 1.1 if I lift it here. So because I'm getting only an extra 0.4 RR for moving here, it's not worth it. So in this case, I would leave it right here. This is how my management functions. Okay, then price keeps moving. Now I ask myself the same question. Where would a loss of momentum occur? I would probably say around here. So I can move my stop loss up to there. Well, not stop loss, sorry. My first partial can be moved up to there, just like that, which means that now my first partial would be 1.35 or so. 1.4 RR would be my first partial. Or, because this is still overextended, I could move my stop loss here or to 50% in this candle. If I did that, how much more would I be making? This is a game of trade-offs. I could make 1.35 RR here, or I could make 1.65, so an extra 0.3 RR here, or I could make an extra 1.9 RR here. So 1.9 versus 1.4 is only an extra 0.5 RR. So I'm okay with allowing this to get a little bit more crazy. If this can make a move like this, then I'll move, because now the prospect of the gain versus here doesn't make sense to keep trailing with this loss of momentum here. Okay, so let's see if that can happen. Beautiful. Okay, exactly what I want to see. So on that candle, this line like kind of remains. So now a loss of momentum has to happen still around here. So I'd still be making 1.4 if I manage here. And now if I manage to this low or to 50%, okay, so here it would be a 1.4. Let's write that down. And that's a potential, so I'll make it orange. Here it would be 2.3, which is almost a whole RR gain extra. And here it would be 2.75, which is an extra almost 1 RR. So I'm going to instantly partial at that point there, because now I don't want to give up that potential gain, because now what has happened is so much money has stupidly entered this market that the likelihood of snapback is very high. And a snapback means a new setup here or a follow through down. So I want to take the money off. Now this brings me to a beautiful saucy point of this entire webinar, where I wanted to discuss one thing that I wrote to someone this week, which is absurdity in price and my partial system. That's what I call it. Somebody asked me, you know, like, kind of, why do you do this? Why do you kind of like sometimes take it, sometimes you don't? This is why specifically. These are my rules. The more price explodes out of nowhere, the more partials I will take. the more it moves normally, the less partials I will take. Why? Absurd price movement, when it goes crazy like you guys just saw, is an opportunity to take profit on the emotional lack of control of others. Because the only time in price that this kind of move occurs is when emotionally lack of controlled people get really, really hype on the fact that this price is never going to stop and is going to go to all-time highs, GameStop, all the other things that do this, and they start getting in at every point. And the buying gets so excessive that it gets so unbelievably overextended from price or from neutral price that the likelihood of snapback becomes very high. So my trailing or my management takes advantage of the lack of control of others. And when they lose their minds and start floating in the clouds on all the possible money they can make if they enter along right now, that's where my profit is being taken. It's as simple as that. And I'm looking to sustain that. Because the price is moving normally, there's no reason I need to move to any break, to any like quick profit. I can slowly let it do its thing. But the second it gets absurd, there is no reason for me to allow for price to return to normality before it continues or fails. And instead I can take the instant profit of the lack of control and the emotional ineption of others, because that's always going to exist. People are emotional. People cannot think, and people will not make good systems. Most people lose. This is one of the reasons. We, as traders, as trend followers, take huge advantage of that. This is one of the ways that I take advantage of that. That's it. So I take a partial here on simply understanding that those people are losing money. 5.5 is my first partial now, and this is a gain of plus 2.75. As simple as that. And now I can simply do one of two things, okay? There are two ways that I can now manage this. One way is to allow price to simply keep moving with MBs. Another way is to manage with a loss of momentum. Another way is to watch for new absurdity. Now, if price does this, I won't further manage. Why? Because I've already managed the initial absurdity. Let it correct, let it do its thing, and then if price, for instance, does another absurd thing here, I will manage again, because this is emotional lack of control. Okay. Another way I can manage is a loss of momentum again. So right now I have to consider the prospect. If there's a loss of momentum, where would that be? Around here. So now I have to ask myself from a standpoint of opportunity if it's worth or not worth. If I manage to here for my next 50%, I'll be gaining 0.75 RR. Otherwise, I get break even. The question now is 0.75 RR worth the break even, or is it more worth letting this keep going? In my personal opinion, due to the fact that I've already made almost 3 RR out of this trade with a general 50% win rate, I have more than enough money already secured on this that I don't need a prospect of 0.75 RR, okay, to control this trade. So I'm going to leave the stop loss at break even and let price digest the move with hopefully a new move higher rather than a break even. But I'm okay with either one of these happening. That's a very important part of this. I'm perfectly happy with this because I've analyzed the opportunity of what's available. So now we'll allow price to do what it needs to do. Okay, let's continue with the management of this. So price keeps moving, but that's perfectly fine. I have no problem with this. It keeps making this. So again, where would a loss of momentum actually occur? I'd probably say around like here. Now the same question lands. Am I willing to take a partial here or not? That's 4.8. That puts me at 2.4, which puts me at 1.2 RR gain. So if I take a partial here, I get 1.2 RR. So am I willing to give up 1.2 RR for a break even? In this case, I wouldn't be. I don't want to give up an entire RR because I'm on average going to make 1 RR or more on most of my 50% win rate trades. So I'm going to take a free partial that's going to give me free money if price comes to this level and take another 50% off and leave the rest to run. Let's see if we can get that. Okay, so it keeps playing out, kind of building this little area here. Okay, and it takes me out for that extra 1.2 RR gain. Okay, now the rest of my stop loss can be at break even. This is my last partial. And now I want to be very, very conservative with it. I want to let this thing run. So the only way I take a partial without a trail of a MB is if price goes insane and people get emotional. If it does something like this. Then I might partial here. Why? Because at this point, I know the MAs will do what? This. And at that point, there's no reason that I should hold on to this trade because the likelihood is a snapback to then fail or return to normality. And I'm okay with both of those. So let's let absurdity take over the market, or let's let common, normal movement of price continue to occur. Let's see what we can do. Okay, so price makes a new MB low here, which means the previous MB low is here, which is where I can move my stop loss. The way I'm currently managing my running trades is by moving to the most recent second MB. It's as simple as that. Instead of the most recent one, I move to the most second recent. Why? Because I want to allow for reaccumulation. That's it. That's why I move it like that. That's all. So now I wait for absurdity or new MB. That's it. New MB. Stop loss can move to the most recent second one. Okay. And in this case, actually, now that I'm looking at this, it would have fully taken me out of this trade before I get to sit into the big runner, which is perfectly fine. So I get taken out of 4.4, which is 2.2, which is extra plus 1.1. So actually, now that I'm actually working through the trade of how I would manage it, I would miss this move, the big one that happens right now. Right? There it is. I miss it. Guess what? That's part of the game. So that's very interesting. I didn't actually know I would have missed this now that I'm looking at it, but that's fine. That's a missed move for me. And my entire gaining on this would be 2.75, 3.754, 5.1. 5.1 RR. That's insane. That is an insane gain on over a just under 50% win rate. That's crazy. I could get my win rate down to 40, 33%, 30%, and still make a fuck ton of money with that kind of RR gain. This is why management and your version of management is very, very important to break down for yourself, okay? And now, right, price goes back into kind of a reaccumulation and stage one back and forth where the MAs are now sloping downwards. So the only way I re-enter this, right, this is the reason this setup was good, is if price moves up, goes sideways, ICIs, and then I can take an entry. Why? Because if this happens, you can imagine the MAs. You guys maybe can't, but I can. Price will go sideways if this can happen, then start sloping upwards a little bit on the 50. This will come up, 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 and go sideways a little bit, and that is a perfect kind of entry for me. Can that happen for me? Moves up, it doesn't make the entry. What? I don't get a trade, right? That's it. It's as simple as that. However, another thing that I personally follow with the MAs is that oftentimes on the first slope up, the first time they start sloping up or cross, an ICI entry can be very powerful if it's not too overextended, okay? So when this is still just starting to slope up and this one just started sloping up and they haven't even crossed yet, right, and they haven't moved up, this is the first ICI happening with this condition being met. So I would consider this as another good trade, okay? So you could take it. Again, look at the ATR, about 0.12. Look at where that is. 0.12 is right here. Does that make sense as a stop loss? For me, it doesn't. What's 0.24? Here. Does that make sense as a stop loss? No, it doesn't. So what can I do? I can protect this low and leave it from there. Doesn't buy stop me in. Does the stop loss still make sense? Yes, it's still under the bodies of the candles at least. And if I put it here, it's beyond double ATR. So I'm going to leave it there. Is it still good? Yes. Is it still good? Yes. Has it tapped me in yet? No. Now I have a choice. I can either leave it like this or move it up to below, let's say, this candle body, or even below this candle's wick. How much is that? 12.7. So 0.127. How much is it now? 11.9. So it's just over ATR, which I'm happy with. This is a fine entry for me. It taps me in. What do? I'm waiting for initial momentum, or 1 to 3. So it starts building kind of this momentum, but there's nothing to move yet. Again, ask myself a question. If the next candle did this, is that a loss of momentum? No, it's not. So I have to wait. Okay. If the next candle does this, is that a loss of momentum? I would say yes. So I can move my stop loss to break even. Okay. Now I need to ask myself, where is it worthy to partial? Has it extended itself? No. To extend itself, what does it need to do? Something like this. Then I can manage. Does it do that? No. No. Okay, it does. Fantastic. Now the questions begin to be asked. If price, am I willing to keep on managing with this partial if it loses momentum around here? That's only a gain of less than 2RR. I'm not happy with that. So I'm going to manage to either this low or 50% of this candle. This low puts me at a gain of 1.25, and this one puts me at a gain of 1.65. So that's a gain of almost an extra 0.4 to 0.5 RR. So am I willing to gain an extra half RR for this management? I would say no. So I'm going to move it here and wait for either a crazier absurdity and then move, or let it take me out. Let's see. Okay. That's what we call free emotional lack of control. I can now move it here or here. If I move it here, I'll make 1.65 RR. If I move it here, I'll make 2.3 RR. That's an insane difference for me. That's about a 0.6, 0.7 RR difference. So I'm going to manage here because now I'm expecting this absurdity of price to be met with a breakdown into continuation or failure. I get taken out. That's a 2.3 RR gain, just like that. And I've already gained more than I need to gain in 2 up to 3 trades. So what's next? Next, I need to ask myself the same prospect. If this loses momentum, is it worth the trade? Momentum loss is around here for me personally, based on what I'm looking at. So that gain would be only 0.5 RR. Is that worth it? No, I will hold it for new absurdity or a new MB. Nothing to touch. And now we're here. So simply, these are the trades you're in now. Or this is the trade you're in now if you had traded it. And all you're waiting for is hopefully a absorption of all this. It eats the price and then it makes a new move and you can move your stop loss to the new MB. Or it fails. And now you guys know why my bias on this, like I just told you guys, is to literally either reaccumulate and keep going or to hopefully keep going, which will make my UJ trade inherently, likely, hopefully, keep going. And this is exactly what I showcased in the most recent 3 ICI Extras live trading videos I showed you guys across multiple timeframes and across multiple markets and showed you all the management and walked you through it. This is all I do. It's a trade-off. Now, if you're not at the point yet where this experience-based trade-off, opportunity cost of like doing this RR stuff makes sense to you, then guess what? You don't have to. You can simply, for instance, break even at 1 to 2 RR and take a partial and hold the rest with either MB lows or double MB lows. That's it. You don't have to make what you're doing complicated. You can start simple and you will, over time, through simplicity, even though you'll be making money, start noticing things about price. Guess what? I used to do this. And every time I took a 1 to 2, guess what I noticed? Price kept moving. And I was giving up this gain. How could I be part of that gain, I asked myself. Over and over again. Thousands of images, thousands of markets, thousands of setups. And all of a sudden, I've created a management system that works for me a little bit better than the one previous. And now guess what? As a result, I make a little bit more money. And as a result, I can do less work and make more money. Does everyone follow? Does everyone understand this breakdown and the analysis and why I'm still bullish on this, still following it, and how price can easily deliver into that bullishness? Whew. And there we have it. And back to UJ now. The same thing occurred, guys. All I saw, in this case, I just fucked up because it was the wrong thing, is I placed my buy stop, and I noticed that, hey, there was a down candle, and this low is nice to protect, so I protected the low, and I got buy stopped in. And then I said, oh, fuck. As it started moving, I was like, oh, wait, GJ is the one. Oh, what the fuck is happening? But then it started moving. I moved to break even. I took my first partial where? Can anyone guess? On the loss of the momentum as well as the absurdity of price. There's absurdity. Look at where it is in relation to these guys. I took a partial into it. As it started moving higher, boom, partial. Next one just kept going. Started moving long again. What did I do? I looked at this, and guess what? It's a loss of momentum. That's when I sent it. right here. I said this would be a loss of momentum. Look at this. Hold on, let me find if I can find it for you guys. Because I'm sure I drew it before I took the partial, right? Yeah. So take a look. I move my stop loss to that low of the MB because it made a new one. Then this momentum starts to come in. So I'm happy to take a partial with the loss of it because I'm be gaining this much more versus this much where my stop loss is. Again, opportunity cost of letting it run. It starts going sideways, but I still have my stop loss right here, so I'm waiting. And then I get tapped out right before a rollover for an extra gain. And the rest is being what? Look, expected to be managed. And guess what happens? I manage it further. And guess where I am now? I managed to this low. And I'm still in the trade. And now I hope this holds and starts mixing an MB high and I can move to the next MB and then it goes and makes a crazy move and then it breaks and then it moves and then it goes and I move to the next MB or the next MB and then I keep doing this until hopefully, for whatever reason, it comes and takes out this high and then on the higher time frame basis, oh yeah, that is the high. That's the crazy high that we've been all aiming for. Right here. I hope I can get my explosion. That's all I want. That's that high. It's the same thing on repeat. We've been aiming for this high. You guys want to know since when? Since this SND 2.0 right here and right here. This is when I told you guys I'm long to take out this high and this cloud of liquidity. That's it. And we've been following it all the way through. This is how you follow contexts. Which puts us into our basic quick outlook, which is all those XXX USD pairs are useless. I'm not looking at them. I don't see anything clear on them. Most XXX JPY pairs are very clear. And this week, once again, a crazy, crazy thing that you guys might have not expected. I will be watching for XXX JPY longs. And I will continue to get involved on these same trades. And I'm going to manage my UJ now. And hope that it keeps going into new highs. That would be fantastic to see. And it's in a beautiful place right now to keep going because it's in reaccumulation with a low. That's it. Can you please help explain the ATR values? How does it help us measure our stops? An ATR is the average range that the price moves on the given time frame you're looking at, which means that on average, if that's your stop loss, then it can take you out. But if it goes in your favor, then great. You're making the same prospect of the upside of the average. You keep going. I just use it because I know it's an average. So if I'm just over the average, then my likelihood of staying in the price, if I'm right, is higher because if it's going to continue, it should continue now to the average to the top side. And if it's over 1 ATR at least, which is what I do, and under 2 ATR, it makes sure that my risk to reward doesn't get out of whack. Because if I have a trade like this one, but my stop loss is like this, that's a stop loss of 35 when the ATR was like 10, which means I'm almost triple the ATR, which means that even if it goes up, I'm giving up RR because I'm skewing the RR against me because I'm trading a lower average of what it a much higher average than what price normally moves. So that's all I do to use it. Okay? I look at the number and I want my stop loss to be just at that number or above and below double. That's it. Nothing crazy. Very, very simple. There we are. When GJ is way stronger than UJ, doesn't that mean GU should be in bullish context? Nope. GJ and GU are two different pairs. But I mean, on a lower time frame, yeah, this has great trades. I think I spoke about this like last week. Somebody asked me about like one of the XXX USD pairs for lower time frame longs, and I said, yeah, it's beautiful. And I even showed you guys. I did like a little live trading during the webinar of how you could have gotten involved. So yeah, like GU probably has great longs in it. Like anywhere in here to here to here, 1 minute longs are perfectly great. I'm sure you can find a bunch that are good, but I'm not trading a 1 minute. So if I'm trading a 15 minute and you have anti-biases, because GU, let me ask you, does it look like GJ on the higher time frame? Not at all. GJ is here. So Why would I look at it? It's useless to me. Overextended from the MAs. What's the likelihood of this? It's going to chop around. It's very likely to chop around for now. That's all XXX USD pairs right now. They're ugly. Except gold. Gold is clean. So this week, I'm likely going to watch for... Oh, yeah. So gold, I can't follow longs until it makes the new MB for me personally. But if gold can continue sustaining long, I'll be watching for longs there. US 100, I'll update you guys on that in the MetaFX trade ideas. I don't see anything on it right now. USD CAD is just fell off the face of the earth, so that's off my list for now. So all I have is GJ, UJ, and gold that I'll be watching for longs. Gold needs a little bit of time, so I'll make that orange. UJ I'm managing, so I'll make that like, I don't know, blue. Okay? GJ is good for longs or setting up potential longs. UJ looks fine. AJ, yeah, you can follow AJ as well. I don't care. That's fine. It's all the same thing. I'm just following GJ and UJ. This needs time. I said it earlier today. I showed you AJ and showed you what I need to see on this. Right now, there's nothing on it, though. I don't see it. I like GJ and UJ, personally. Yeah, this looks really clean. Hopefully my stop loss can hold, and then we get a beautiful move out of this. This is phenomenal. Phenomenal, phenomenal. Plus 8 RR this week on EJ. Yeah, there you go, dude. Exactly. Yeah, there's countless. They're all like the same thing. They're all doing the exact same thing. No matter how you traded these. Especially on lower time frames, you can get insane RRs for these, for sure. Yeah. Good shit, dude. That's really good. And yeah, I just have my UJ management now. And you can see that's why I have this thing in yellow, because it's not complete yet. At the moment, yeah, it's just managed like that. So if this gets higher, it only has a chance to go higher. That's it. So this is the guaranteed journal at the moment. The guaranteed results. If it wants to go higher, it can. And then great. I'll make more money, right? If this goes higher, this goes higher. Which is phenomenal. And we'll let it do whatever it needs to do. Otherwise, we get to sit back again. Okay, guys. I think it's time to wrap it up. 2 hours, 30 minutes. Seems about the time. All right, listen, everyone. Thank you so much for participating, for being here, for showing up to the webinar, for interacting, for the chats you dropped. For everyone that's brand new, welcome aboard, guys. You're in the right spot. We've got a lot to teach you. We've got a lot to learn. We got a lot of markets to take advantage of, as always. Just an insane amount of markets to take advantage of. So, there we go. That's fixed. All right, guys, let's have a beautiful week. I look forward to seeing everybody in the chats and the trade talks.